and I had $920 of credit left on my credit card. Not even savings, just credit on a credit card. And I went to this event in 2018, and at the Airbnb that I was staying at, I couldn't even afford to be inside. Everybody who was rich was staying inside. I actually slept outside for 3 days at that event. And for $25 a night, they set up a little cabana so I could sleep outside, which was kind of insane. It was in Orlando, at least it was warm. And for $25 a night, everybody else was staying for $150 a night, and I couldn't afford that. But the people that I met there really elevated my life, and I wanted you guys to have a moment to be able to look around, because your next business partner might be in this room. Your next investor might also be in this room. Maybe somebody who could help grow your business or your investments could be in this room, because at that event, at that same Airbnb, I met my very first client, somebody who I was talking to, who was actually helping people sell, or he was helping sell sales training on webinars. And he was my very first client. And there was a coaching program that I wanted to join. And I said, hey, I don't want you to pay me. I want you to pay for this coaching program. It's $1,800 a month. And there was 10 people that I pitched because I didn't have the money for it. But the deposit to be able to get into that program was $800. And then there was going to be $1,000 due in 7 days. And then there was going to be $1,800 a month for this program. And I had $920 of credit left on my card. And I was like, I have to do this. So I had $120 of credit left. Didn't know what I was going to eat that next week. Like, that is how broke I was. But I knew that the information and the knowledge that I had that was contained within that program would help me get to the next level. And so I became very resourceful because I didn't have resources, right? And so the biggest thing for me was understanding that there were people around me, proximity, that I needed to be able to get around in order to further grow and elevate. And I'm grateful for you guys coming out here to Utah for Free Fund Friday to be able to come and learn and network with other people and come and learn about funds. And what happened is I ended up joining that program, and the guy, I said, hey, I will work for you 40 hours a week, $1,800, and I will help you grow this presentation. And I became a huge fan of webinars and presentations. And how do you actually help somebody shift their beliefs to be able to see the world in a different way? And this is something I started to learn. And one of the coolest parts about this was that guy gave me a shot. There might be people in this room that may give you a shot. You're talking to people and learning about what they're doing, and they may be able to help you in a certain way, and you might be able to help them, they might be able to help you. And this guy was able to help me. And he was my very first client, and I started to get results for him. And I used that, and I started to snowball that track record. And I eventually met a guy who introduced me to my very first 8-figure client. It was the first time I ever gotten paid more than $10,000 to be able to write a piece of sales copy for somebody. And it was one of the most incredible experiences to be able to go on that journey. And since then, we were able to continue to grow and expand my agency. And then in 2022, I came and started working here at Fund Launch, doing all the marketing and helping with presentations and helping with campaigns and emails. And it was one of the coolest experiences to be here at Fund Launch, to be able to help grow and work with really, really cool people. So the reason I bring that up is because proximity is everything. The people that you are around right now really means a lot. I was talking to Colby a little bit earlier, and he was in Pace's group. Has anybody heard of Pace Morby, Sub 2? Anybody do any of his stuff? And he talks a lot about proximity. I know Bridger was just there a couple weeks ago with Pace at a certain mastermind. And this is somebody who understands the power of proximity and being able to be around people who are also doing really, really big things. So I want to do a quick exercise before we go ahead and get started. A couple announcements before we start out. We are going to go for about 2.5 hours. And for the next 2.5 hours, you guys are going to have an opportunity to be able to learn about investment funds, learn about how funds work, how funds are structured, how to be able to access capital, how to be able to find investors, how to be able to go and learn the places that you need to be able to go and actually raise that capital. Learn how to be able to structure presentations, how funds work, how they're put together, because this is the greatest vehicle of wealth building on the planet. And the man that you are going to learn from is going to have a lot of amazing sauce that you guys are going to be able to get. So what I want to do before we do that, a couple quick announcements. Restrooms are going to be, if you go up the stairs, first doors on the right. If you guys need to use the restroom, quietly excuse yourself during the presentations today. We have drinks here in the back, so feel free to be able to grab those. We also have swag over here, totally free for you guys. So they're sorted by small, medium, large, extra large. We also have a bunch of books as well that you guys are free to be able to take on your way out. So with that being said, I want to share just a quick intro about the man that you're going to be introduced to today. This man has influences about and reaches about 100 million people a year. The reason I know that is because I run the ads and I run the marketing behind this man. There's over 100,000 people that have taken one of his courses and programs online. He has helped launch 300 funds in the last 3 years for untraditional managers. Now, what's an untraditional manager? An untraditional manager is somebody who never went to work on Wall Street for 20 plus years. How many of you that fits your category? You never worked on Wall Street for 20 plus years. It's also for someone who is never had an Ivy League degree. You know, this world of Wall Street has always been locked up in Ivy League towers, and it's never been shared with everyone, with the general public, right? It's always people who are, all this stuff has been gatekept for years. And right now there's 3 companies that are taking over the world: Vanguard, BlackRock, and State Street. Combined manage $22 trillion projected by 2030. And if we don't start to do something about this, then we may become slaves to only a handful of companies, which is why we need more people to start funds. And so this man decided to be able to, he had a question. He said, how can I democratize Wall Street? How can I make high finance more accessible to everybody else? For people who never worked on Wall Street and people who don't have an Ivy League degree, how can we get them access to be able to have this type of information, to be able to actually launch funds? And currently we're launching about 2 funds a week out of our group. And so the man that I'm going to bring to the stage, what I want you to do is I want you to treat this person in the same way that you would want someone to introduce you. How would you want somebody to bring you to the stage? How would you treat that individual? Would you be slumped over? Would you clap a little bit? Or would you come out of your seats and rise and clap with thundering applause? So we're going to do one quick practice for that. How would you want someone to introduce you to the stage? So what I'm going to do is I'm going to say, now help me welcome to the stage, and I'm going to say you, okay? And when I do that, I want you to act like, how would you act if I was bringing Michael or Colby or Scott to the stage, okay? So we're going to do a quick practice. We're going to have everybody go up on their feet, and then we're going to bring them to the stage, okay? So we're going to do a quick practice. You guys ready? Here we go. Everybody, stuff out of your lap. Help me welcome to the stage, you! Woo! Yeah. Hey, that was pretty good. That was pretty good. Okay, perfect. So guys, for the next 2.5 hours, he's going to go fast, and he's going to be able to drop a lot of value. Guys, help me welcome to the stage, Mr. Bridger Pennington!
Thanks, Adam. Well done. Well done. Good job. Get up for Adam, everybody. Well done, Adam. Thanks, Adam. That was a fun intro. I told Adam yesterday, I was like, hey, do you want to introduce me tomorrow? He's like, sure. And he just came up with all that, which is pretty cool. So good job, Adam. Adam also is responsible for about $1.2 million per year of ad spend. It's kind of cool. So if you want to talk to somebody that's our CMO for Fun Launch, also doubles as an MC on the weekends for us, which is pretty cool. Well, welcome, y'all. Good to be here. We're at Free Front Friday. So let's dive in. Who's been to one of these before? A couple of y'all. I see a few familiar faces. Okay, welcome back. Good to have you. Who's first time then? Rest of y'all. Great. How many people, keep your hands, I guess, who has never seen me present before? Well, in person. Okay, how about virtual? Like been on one of our virtual challenges. Never seen me before? All of you have seen me once or maybe not? Okay, that's totally fine. I'm just curious what you guys haven't seen. Okay, that's good to know. The plan for today. We're going to go pretty fast. I want to talk through a lot of topics. People that have been here before, I want to present less today and talk more about your businesses, your funds, what you're doing. Does that sound good? So the idea is for agenda for today, I'm going to spend the first little bit setting the groundwork for just what we're talking about with funds. And then I want to talk about your businesses. I want to bring people up. We're going to go through your numbers, your business, and just talk through it. What can we do to scale it? What can we do to change it? Where are you stuck? What's holding you back? Does that sound good? If you're with me, say yes. Okay, I'm going to do stuff like that, by the way. People that have been here before. Psychologists tell us that if you show up to something like this and you just listen, you will remember about 0% long term. If you take notes, we gave you guys notebooks. We actually just so you're aware, you're like, why are they giving us all this free stuff? This is all leftover stuff from our previous events. So we threw a huge event last year in Miami. We had 2,000 people. We had 800 people in Orlando, 1,200 people in Vegas. We have tons of stuff, books. You'll see like dates on there. That's from like 2022, 2023. So we just said, hey, let's just bring all of our leftover stuff and you guys can just take it with you. Does that sound good? So there's no catch. There's no like, what is the catch? The catch is it's just been in our storage room. We wanted to have you guys let y'all use it. Okay, better to be in your hands than just in a storage room. Sound good? Okay, so psychologists tell us if you listen, you'll remember about 0% long term. If you take notes, you remember about 3 to 5% long term. If you stand up, if you use your voice, if you participate, you remember about 15 to 17% long term. So I believe your time is very valuable. I don't take that lightly that you showed up today to be here. So I want to make sure that we use the time to our best use and you get the most out of it. You can remember it long term. Does that sound good? Yeah. So I'm going to ask you to stand up. It might be a little quirky to get out of your feet, but the idea is to help retain stuff a little bit better. Sound good? Okay, so today I'm going to go pretty fast. If you can't tell, I talk fast because I don't know. Let's get to it. That's my brain works. I just go quick. So today, by the way, just updates. If you guys saw the market this morning, Trump put tariffs back on the European Union. You guys see this morning? 50% tariff hitting June 1st. We'll see. Obviously, it's negotiating leverage. We'll see how that goes. He mentioned that negotiations maybe have gone poorly or not as well as he thought. So he's going to up the ante. We'll see what happens between now and June 1st. Market sold off a little bit. Also this week we had Bitcoin at all-time highs. It was pretty fun. I run a crypto investment fund. I manage about $25 million in crypto. That's pretty fun for us. We're excited to see Bitcoin, and then we believe a lot of other altcoins are coming as well. One other note on the market. I'm just giving you little nuggets that we're going to come back to in a minute. Bond market. Anybody watch the bond market recently? Very interesting. Treasury yields over 5% right now, 5.25%. On some 10-year, 30-year, you look at different ones. What that means, bond yields are directly correlated with price. So if you sell bonds, the yields go up. And if a lot of people buy bonds, yields go down. Does that make sense? So when the treasury yield spikes, it means lots of people are selling their treasuries and bonds. They're getting rid of them. Okay, and there's a lot of other things that go into that. Furthermore, the Fed did an auction. The auction went very bad. Not a lot of people wanted to buy U.S. bonds. And so what happened is the Treasury then stepped in and bought a lot of our own bonds, injecting liquidity into the market, which is pretty interesting as well. So we've seen a huge spike in liquidity and or money printing in the last few months. I kind of tailor it with tariffs. I think a lot of countries right now are saying, I'm going to not hold as many U.S. Treasuries, and or to weather the tariffs, I'm going to print a lot of capital. We've seen M2, I don't have a chart, but M2 money supply has spiked, which is M2 tracks, it's this global money supply for pretty much every country on earth, has printed another enormous amount of money in the last 90 days, which is pretty interesting. Generally speaking, what we've seen in COVID and other things, generally speaking, that money needs to find a home somewhere. And a lot of times it's in assets that me and you hold. And in nominal terms, those assets rise. Right? Not in real terms, but in nominal terms, something like Bitcoin or gold or whatever goes up in terms of dollars because there's just more dollars. which is pretty cool if you're in the fund management game. If you're in the fund management game and you buy assets, if you're going to buy assets and build a Polynesian culture center in Las Vegas, like we talked about earlier, that's an asset. When there's lots of dollars out there, those dollars flow to assets, and generally speaking, asset prices rise. It makes it actually easier to win in nominal terms in investing. Is that making sense? So a few things. We'll kind of circle back to some of those in a minute. I'm going to talk about this. So something that I like to live by is this. I like to watch what people do, not what they say they do. Can you guys see these okay? Are they both working? Tell me if they stop working. Here's a question. Some of you all know the answers. Don't spout it out if you've seen this before. But what do Grant Cardone, let's see if this works here. What does Grant Cardone, I'll click my clicker here, Cody Sanchez, Ty Lopez, and Pace Morby all have in common? They all have, they're all online marketers. They're all teaching a course online or something, and they all have launched investment funds. Pretty interesting. I like to watch what people do, not what they say they're doing. All these people teach you something online, but I like to watch actually what's the game they're in. Grant Cardone, $4.5 billion Cardone Capital. Cody Sanchez has a private equity fund. Pace Morby, I was just with him a few weeks ago, launching a $100 million real estate fund. Ty Lopez, they had a big fund. They bought Pier 1 Imports, Radio Shack, etc. Why are the people online that teach all these different things all now launching funds? Why is that the end game? If you look at the Hormozis, this is actually a picture of us at Bear Lake, Utah. He flew out. We went to Bear Lake. That's me. I'm flexing my pecs as hard as I can in that picture. Just got my dad there too. My dad's pretty jacked. There we go. There's us flexing. But Alex and Layla actually joined Fund Launch. This is way before they were famous. Right after they sold their company Gym Launch, they were like, what should we do next? We talked them through like acquisition.com. Right? Private equity is what they're doing. Even Russell Brunson, I spoke with him on stage on Friday. You guys know Russell? I was just with him literally on Friday. They are buying companies at scale right now. They bought Magnetic Marketing, Lady Boss, and he owns ClickFunnels. He's buying tons of companies right now. Why? This is the game that pretty much everyone ends up. If you're successful in some way, shape, or form in business, most roads lead to some way, shape, or form of fund management and or large M&A activity. Now, these last two are kind of doing it internally. They don't have external funds, but internally they're doing essentially private equity, where they're going and buying huge businesses, right? They're all starting funds. Isn't that kind of interesting? So today I want to dive deeper on what funds are, how they're built, what happens here. This is the general road most people follow. They are self-funded. They do their own deals, and some people stay there the whole time. They just maybe they're buying real estate, whatever it is. Then people a lot of times jump to a single asset fund, an SPV, a syndication, something like that. Now, I would tell you to do a single asset fund, a little more structured, tailored. We can talk about that more today. To do one deal at a time. So now you're going to raise from family and friends or people around you to do a deal. And then the last stage of this, a fund, would be you're now doing multiple deals in a pool, okay, for vernacular sake. So let's take a real estate example. Anybody doing real estate? Where's my real estate people? Okay, we had a guy in our group. He was flipping homes for years. He was self-funded. He flipped like 3 to 4 homes a year. His name's Brent Mott. He then jumped and started syndicating for some of those deals. And then he jumped to a full-out fund, did 72 homes the next year. Does that make sense? Okay, so that's kind of the path that a lot of these people go on. Okay, so my goal for today, you should consider launching a fund. It should be pretty fun. This is for people that want to scale. Sound good? Yeah, if you're with me, give me a yes. All right, sweet. Furthermore, we just launched this, opened this up kind of last week. A lot of times it's a big jump to launch to full-out funds. So you have people doing seller financing or trading courses or buying businesses, and there's this big jump to do a full-out fund. Last week we said, what if we could help bridge this, and we launched a new program called Single Asset Funds. It's an incubator to help people build a single asset fund. We have lawyers, people. You just joined it last week, which is awesome. What fund? Actually, let's just talk what you're doing. Can I pick on you for a second? Can we get a mic? So, and by the way, we're gonna share the mic around a lot today. There's people on virtual that are watching this, so they can't hear you. I know you can shout it out, but they can't hear you if we don't talk in the mic. So,
okay.
Yeah, tell us what you're doing.
It's in discovery phase, so I'll just put that out there first.
Yeah.
Nascent, but using tokenization to make real estate more liquid and then scaling it up. So the first one could be like a fourplex I own. I have a lot of equity in it. Tap into a little bit of that equity. The second level of the capital stack, because there's debt for the first half, make it a little liquid, and then as that works, scale it up and help probably institutions tap into more liquidity at lower prices, a lot more speed, and get that money turning over more quickly than it is now.
Yeah, very cool. So tokenizing real estate, though,
Yeah.
which is a pretty interesting play.
That's kind of the method, the path
Yep.
that's now open that wasn't open before in kind of real estate.
And we talked
2.0.
about this as well.
Yeah.
BlackRock announced, I believe it was $500 million they're starting with to tokenize some of their real estate.
Theirs, yeah.
I can't remember if it was Blackstone or BlackRock, but they're going to tokenize about $500 million of their real estate. So it'd be a fractional share of their real estate. It'd be pretty interesting. So
And make that available to
Yep.
just
To
average
somebody else. Yep.
investors instead of having to go to a large bank or something or a life insurance to get liquidity.
yeah, which is pretty cool. So you've joined to kind of bridge this gap, right? Because you've never raised a ton of money before, right?
Not much.
Not much, yeah. So this kind of allows you to bridge the gap doing a single asset fund, which is cool. Clap it up for that. Thanks for sharing. Well done. Well done. Thanks for letting me pick on you. So actually, let's do this, though. And these are a few people we've helped. So this is Jason. He said here, our last investor invested $51 million. Brings our total commitment of $60 million out of $100 million, which was pretty darn cool. You can see those underlined there. This is Heather. She was doing private credit, so doing loans. Within a quick, painless 6 months, we became confident managers of a $15 million private credit debt fund. And we met another partner at the Salt Lake City event in January. This is an event we threw here. This is Kaloa. He's up in Park City. Some of you may know him. He bought this. You might have been in this hotel. This is the Waldorf Astoria. And they're building a second one. So he says this, if you read the red line there, this is our second $100 million plus deal in less than a year. And we are now the second largest owner of commercial space in this part of Park City by square footage. By the time we finish construction on both the Waldorf and Ascent, the Hilton campus will be worth over $500 million. Pretty cool. He actually came through Fund Launch. He actually spoke on stage last year at our event. It was pretty cool to have Kaloa. So we've helped a lot of people do big funds, small funds, whatever. Let's talk real quick. What is a fund? Does that sound fair? What do I even mean by a fund? What's the difference between private equity, hedge funds, venture capital, real estate funds? Would that be useful? Talk about that for just like 3 minutes. So, and this will I'm setting a little groundwork so that we can all be on the same page as we kind of dive into your business. So what is a fund? A fund, in the most basic terms, this is something I hate about finance. They use all these fancy terms for pretty simple concepts typically. Anybody felt that before? It's like once you learn it, you're like, this is so simple. But you called it some crazy term so that regular people don't know what it is, okay? That's how I feel about funds, all right? It's not that complex. All a fund is this. It is a pool of money. Investors, I'll put investors over here. Investors are putting money into this pool. Fund managers, I'll draw in black over here. A fund manager has certain parameters. They're going to draw from that pool. They're going to go make investments. Okay, they're going to tokenize real estate. They're going to go trade the stock market, whatever you're trading. What are you trading?
So I'm doing a high credit quality public trading companies with an options overlay.
Okay, so publicly traded companies with an options overlay. Okay, very cool. So that they're going to give you money in a pool. You're going to go invest that. Whenever you make money, the money flows back to the pool and then gets split between the investors and the fund managers. That's it. Like, it's not that complex. This is like one of the oldest business models on earth. It's like back in the 1800s. It's like, hey, we're going to open up a blacksmith shop. I need some money. Put some money in. Whenever we make money, we'll split the returns. Okay? It's not that complex. So now there's a lot of nuances in here, but it's really not that complex. So then, Bridger, what's the difference between a private equity fund, a hedge fund, a real estate fund, a venture capital fund? What's the difference? The difference is what they invest into. They're actually structured almost all the same, pretty much the same. We've set up now hundreds of these. They're pretty much the same. So we'll start with an easy one. A real estate fund. What's a real estate fund? It's a pool of money that buys real estate. Okay, not that hard. So what's a private equity fund? A private equity fund is a pool of money that buys private equity or private ownership in privately held businesses. So who's my business owners in here? If you went out and bought your competitor's business and or maybe your supply chain, you would be playing in a private equity kind of world. There's a great group on Wall Street called Sycamore Partners. They're about a $10 billion fund. Anybody heard of them before? That hasn't heard my content, maybe? Sycamore Partners owns Staples department store, Nine West Shoes, Aeropostale. Last year, they were trying to buy Kohl's department store. The year before that, they were trying to buy Victoria's Secret. That is a private equity firm. Ancestry.com up the hill. You guys know that building? They were bought by Blackstone. Blackstone owns like half of the world, if you don't know. They own everything. They bought Vivint, by the way. Do you guys know that? And then the Vivint changed. They kind of changed hands. But originally, Vivint was bought by Blackstone, and then Blackstone came and bought Ancestry.com as well. They're owned by the same companies. This is a private equity. They're buying privately held businesses. Okay? So then what's a hedge fund? A hedge fund is a pool of money. Instead of buying privately held businesses or real estate, they're buying public securities or public businesses, stocks, bonds, options, crypto, Forex. Does that kind of make sense? It's not that crazy, right? Venture capital, what's that? It's a pool of money. Instead of buying all those other things, they invest into early stage startups like Shark Tank. So they get pitches, they invest in early stages. But again, it's all the same thing. There's just a pool of money, and they're making investments. Does that sound good? Y'all follow along? Okay, to build upon this, now this pool of money is, it's not called a pool of money. There's a different name. It's called a general partner limited partnership, generally speaking. You guys cool if I share my screen for a sec? Yeah? Cool with that? So generally speaking, we'll see. Say a little prayer for me. Hopefully it pulls up. Hey, yo. All right, so, and by the way, we got, there's tons of stuff. I have all these new frameworks, and we talk about it a ton, so we'll probably use this quite a bit. This is the fund launch formula you're seeing here. I'll come back to this in a little bit. But this is generally speaking, this is how 99% of the private capital in the world is raised, through this structure. It's just what I just explained to you, just in different vernacular, okay? So see my little pool there? Drew that myself, see that? That's a pool of money, okay? This is a limited partnership or a fund. That represents your pool of money. You have investors, just like I drew it before, investors over here that are putting money into the pool, and then you have your fund managers over here in these entities, okay? And they're making investments, just like we drew up before, just different names. So we have a limited partnership here, which is a pool of money. We have investors or limited partners, if you can see that. Limited partners is what they're called. They join a limited partnership that is managed by a general partner or the fund manager that manages this fund. Y'all making sense? Not too hard, right? Now, these two entities here are both, at the beginning, usually owned by the same people. They call it a general partner and then like a management company. But both you could just qualify as the fund managers over here. They then can go, they govern what happens in the fund. And this is all put together and governed by what we call the Bible, or the LPA and PPM. Now, what's cool about the Bible is you get to write the Bible when you launch your fund. So meaning, people today, you're going to ask me, Bridger, can I do a fund that invests into crypto and buys real estate and buys businesses? The answer is yes, you can. Now, do you want to is the better question. I don't know if you want to, but that yes, you can. Bridger, can I charge, all these wonky fees, whatever? The answer, generally speaking, is yes. What you do is you write that down in your limited partnership agreement, LPA, but once you write it down, it is written. It's like the Bible. You can't change the Bible later, okay? Once it's written, it's written. But you can write it as when you're setting up. Is that making sense? So, Bridger, minimum commitment for my fund is $100,000. Cool. You write that in your LPA PPM. Great. Bridger, could I do a commitment for $50,000? Yeah, you can do 50. You just write it in your LPA and PPM. So, now, not to say it's in the universe of funds, there's a lot of regulations and stuff, and so maybe I'll give one analogy here. There's a lot to be done and played in here inside of funds. Because a question I always get is like, Bridger, there's all these rules, regulations. Yes, there are. So the analogy I use is this. It's kind of like football. I'll draw a little field here. Not bad? Okay, here's my field. Here's the end zones. Okay. Here's the end zones here. All right, is that a decent enough field? You guys got the picture? All right. If you came in to a stadium and you had never seen American football before and you just sat down and started watching, you might be a little confused. What's a fourth down? What's a what's a field goal? Why is it 3 points and 7 points and 6 points? Like what's a punt? Right? Why did all these, there's kind of some strange rules in football, a little bit. And you might be somewhat confused and say, I just want to stay with a simpler game like, I don't know, soccer or something. Pretty simple game, right? But if someone came and sat next to you and taught you the rules in the stadium, you're over here, in maybe 20 or 30 minutes, you could probably understand pretty quickly. Furthermore, you could probably develop strategy within the rules of the game. You might, that was a bad call. Right? They should have ran this play on 3rd down, right? Furthermore, to build upon this analogy, if you went and asked a referee, I'll put it in black here, a referee what the rules of the game are, they would teach you the rules, right? This is kind of like when people go talk to a lawyer. Hey, Bridger, I want to set up a fund. I'm going to go talk to a lawyer. Great. The lawyer can teach you the rules, just like a referee can teach you the rules. But it would be different to talk to, a referee for football and, Mr. Andy Reid, right? Coach of the Chiefs. He also knows the rules of the game, but he's developed a lot of strategy within the rules. Does that make sense? Kind of that y'all follow this analogy a little bit? So when we talk about funds, yes, there are rules. I'll share with you a bunch of the rules. I don't know if today we have time for all the rules, but there's guidelines, there's posts, there's clear in and out of bounds, right? Don't lie is the first rule. Do not lie to people. Be honest. Do what you say you're going to do. Follow through. Have annual audits. Have third-party people checking your thing. Have multiple checks. When you send a wire, it can't just be you. It can be 2 or 3 people sending wires, right? Pretty standard stuff to just make sure that there's checks and balances, right? But within the rules, there's a lot of strategy. How are you going to incentivize investors to put money in your fund? You're going to charge, do you charge a 2% management fee or a 1.5 or a 0% management fee? I don't know. What's the best thing? What would Andy Reid tell you, right? What's the best play to incentivize people to put money in and keep money with you and or invest in your next fund, build a brand, build a long-term firm? That's not just 1 or 2 years, but it's 10, 20, 30 years. And build a reputation track record around that. Is that making sense? Yeah? Can I get a yes? Okay. That analogy make sense? Yeah, actually, did it make sense? Okay. Don't know if I explained it the right way. There you go. So we got funds, GPLP structure. So again, in the Bible, there's a lot of strategy you can put in here when building out your fund. And again, I'll say this again, 99% of private money in the world is raised through this little structure right here. And whether you build your own fund or you're investing in, who's an LP in a fund? Who's ever invested in a fund? You've probably read through a LPM, PPM, right? You've seen this before. When people pitch you offerings and they're asking you to be a limited partner, it's important to understand how this works. A lot of you, you're all going to make tons of money in your career. I'm sure you're going to invest into funds in the future. You got to understand how this works. Sound good? Yeah? Okay, let me go back to my other screen here. So briefly, I'll tell you just a quick story. And then I want to hop into your funds and your deals. Sound good? Back to kind of like giving, the plans of the house. So briefly just on me, some of you guys don't even know who I am. And I'm not here to talk about myself, but I just want to give you, just so you know that I'm credible to talk on this subject. Does that sound fair? So, number one, it's my beautiful family. We live in Draper, Utah. I live just right around the corner right here. I'm from Utah. I grew up in Sandy, Utah, of all places. This is my beautiful wife. We grew up on the same street together. We've known each other since we were like 8 years old. It's awesome. We have 2 kids. We just had a baby Paris, baby Jonah. We got 7 or 11 chickens now. And it was pretty fun. This is a little of my business career here. So I started Blackbridge Holdings on the left, kind of left to right here. Blackbridge Holding I started in college. I went on a 2-year church mission to Taiwan. Loved it. Loved my mission. It was awesome. Came home. I was very ambitious. And I said this, you guys are a Utah crowd. You guys know missions. But I always tell people, like, if you go sell religion door to door for 2 years, like, everything's easy after that. You know what I mean? If you're like, how is it, like, it's so hard to raise capital. I'm like, well, it's better than knocking doors in 105-degree weather trying to sell religion in another language, Like, that's a crazy thing. It really is a crazy thing that missionaries do. If you see missionaries, honk at them, give them a wave or whatever. I always tell people that because it's not, sometimes not so fun. But it was beautiful. I love my mission. I love Taiwan. I speak Mandarin now, and it's just awesome. I come home. I'm super ambitious. I'm like, I'm going to get going. I felt a little behind because I, spent 2 years on a mission. I'm like, I got to catch up. Like all these my peers are now ahead of me. Like I got to get going. So I started 6 businesses my first 2 years of college. Not business ideas, businesses. I did a Chinese tutoring business. I built websites for people. I wholesaled real estate. And we made, we were making $5,000, $10,000 a month, $3,000 a month, $500 a month. Like in college, we're trying all these businesses, right? Finally, my dad grabs me. He's like, you're a chicken with your head cut off a little bit. Go talk to my business partner. This guy can really help you out. I drive up in the hills over here. I go to this guy's house. It's a beautiful white mansion. And granted, I grew up in Sandy. We grew up in a normal house, nothing special. Nothing bad either. I didn't grow up in a bad house, but nothing special either. My dad drove an old Ford Expedition with a dent in the door, and nothing that special. So I go to his business partner's house. This guy's got a huge house. It's beautiful. Long story short, some of you guys heard the story. I'll go very quick. I come to find out my dad and him are running an $8.5 billion family of real estate funds at the time. And I was like, whoa, that's crazy. That is twice as big as Cardone Capital is today, Grant Cardone. This is years ago. Today they're over, I think, $48 billion. Now and my dad's now retired. He's out and he just mountain bikes and sits at, just does fun stuff. He might actually show up today, by the way. He texted me. He's like, I'm gonna try to roll by. So we'll see if he shows up today. But I was blown away. And I thought, I was at this dude's house. I'm like, hey, can you teach me? He goes, go talk to your dad. And I'm like, my dad's poor. We live in a small house. You live in a rich house. I want to learn from you. And he goes, Bridger, sorry to break it to you, but me and your dad make about the same amount of money. And my chin drops to the floor. I was like, huh? Like, come again? And he's like, yeah, me and your dad are pretty much equal business partners on this fund. I left the dude's house. I drove straight to my dad's house. I was like, Dad, what the heck? Like, what's going on? Like, we've been on one vacation in the last 7 years. Like we're all like loading up the car, driving to Disneyland for 12 hours because we don't want to buy plane tickets because it's too expensive. Anybody done this before? You're laughing. My dad our whole childhood, we never flew on a plane. Like, it was always like, no, we're driving. And maybe that was just because he wanted his family in his car. Maybe that's probably the real reason. But anyways, pretty cool. So long story short, I come to find out my dad's running these big funds. He then sits down and starts to teach me about funds. And we got on the whiteboard, and we'd whiteboard out GPLP structures. We white out how to raise capital, how to do all this stuff. Funny thing about life, once you start to learn something, you start to recognize that thing in your life. And so I started to recognize fund opportunities around me. I was at school at BYU. I was working my business, and I was working an internship at the same time. At the paid internship, I saw an opportunity we could launch a fund inside of this business. I talked to the owners of the business. I'm like, dude, we could do a fund. What if we we were going to finance their clients? Their clients that were coming through needed financing, and we could do them like short-term loans. He's like, we love the idea. Let's do it. So I went back to the drawing board. We put together this little micro fund. I was so excited. I'm 22 years old at the time, and I hit this wall. I'm like, crap. How am I going to raise money? And then I had a great idea. My dad. Apparently, he's got tons of money, and he doesn't spend it on us kids. So I'll go pitch my dad. Not a bad idea, right? My dad loves me. He's a great guy. I'm the youngest, by the way, so like I'm the last kid, So I go pitch my dad for money. As you probably can expect, my dad, he said no. Because I have the money to invest, but if I invest in your fund, it would ruin the experience of you raising money on your own. This will be a crutch that you'll never be able to recover from. So he said no. I then walked out with my tail between my legs a little bit. I said, fine, I'm going to go figure this out. So I went and hit the streets. I talked to everybody I knew. On this first fund, Blackbridge Holdings, I raised a whopping $49,500 from, I think, 7 investors. Teeny, tiny micro fund, but it was enough to get started. That first group of investors, we got them a 64% return on their little micro fund. Good return, small fund, right? So then we launched our second fund. That fund, we raised and deployed millions of dollars on that second fund. I ran that fund for about 3.5 years in school. I think my last year of school, I made over 6 figures a year at BYU as a student, which is kind of cool. Running a fund as a student, walking around campus, which is kind of fun. During that time period, at the end, we had a competitor come and buy us out. So we had a competitor we were kicking out of the space. He gave us an offer. We sold the whole fund, paid back all investors plus the returns. Isn't that kind of cool? And so from there, I had a lot of people asking myself, my dad, my brother, who also, I didn't mention him, he's an investment funds attorney, was at the largest law firm in the world for funds, now is broken out and running his own fund now. How did you guys do this? None of us worked on Wall Street. None of us, went to Ivy League schools. I'm a dropout. How did you guys get in this game? My dad graduated with C's and B's from the University of Utah. Their company's headquartered in, do you guys know this? They're headquartered in Sandy, Utah. They have offices all over the world, but they're headquartered in Sandy, right by Jordan High School. Isn't that crazy? So how did you guys do this in Utah? People make fun of Utah, but all my Utah people here. We fly to New York. We go to, like, where are you from? Oh, we're from Utah. Like, why? That's the first question, why? I'm like, well, I was born there. We love it. I'm like, look at the mountains. I have to like advertise Utah. I'm like, oh, and they're like, oh, I guess that's cool. Yeah, maybe one day when I retire, yeah, that's cool, I guess. They always add the I guess at the end. But it's funny. So how did like an untraditional manager, how did we get in this game, okay? So we then started an online thing called Fund Launch. We started making videos. And then those videos got more traction and traction. Anybody ever made videos of themselves before? Yeah? It's not that fun, is it? It's not that fun. But we had a lot of people like, this is helpful, this is useful. And we started to get traction. I was like, okay, we'll keep making videos. We made a small course, then I got a bigger course, then we built a whole incubator. Fund Launch today, we've had over 100,000 people go through one of our courses. We've had roughly 1,000 people go through our Black Card Incubator. Our Black Card Incubator is anywhere from $25,000 to $45,000. And what happens, someone joins Black Card, we have 15 different coaches now that work with them. We have a pitch deck designer that builds their pitch deck. We have 5 different law firms. We partner them with a law firm, and we actually go fully and launch their fund. That's why we're called Fund Launch. It's not Fund Teach, it's Fund Launch. Like, we go launch. Does that make sense? So that's what we do as a company. We sell, that's a pretty expensive product, $25,000 to $45,000. Last week, we opened up a thing where we could help people do single asset funds. Actually, today is the final day. It's closing today, which is crazy. It's $7,500. I'll just tell you the prices. It's $7,500. You get office hours, coaching, a full new platform, and all the legal to put together one single fund at a time. And then below that, everything's free. Like, we believe in democratizing Wall Street. I believe more people need to learn this game. That's why we throw Free Fund Friday. We have Alt Street. It's a 10-course platform. It looks beautiful. It's just like we've had about 20,000 members start. We started about 6 months ago. Alt Street, we have 10-plus classes teaching people on investment funds. We just give away everything for free. And if you want help implementing, give us a call. Does that sound fair? Just telling you my book. That's my book. That's our game, okay? On that note as well, I'm going quick here. We launched a blockchain investment fund, me and Dan Young. So we manage about $25 million in crypto. We've done that for 2.5, or I guess since 2022. So I'm coming up on 3 years right now, which has been awesome. And then we just recently raised another fund for Fund Launch Partners. We just closed right around $30 million capital raised just last month. We are now investing into our favorite funds that come out of Fund Launch. So of our 300 plus funds we've launched, we've had a lot of people that want to partner with us. We've told them no forever. And finally now we're saying, hey, actually, you know what? We'll write you a check. If we really like you, we'll write you a check. We'll partner with you. We'll take 7-8% of your firm, and we'll actually be on your team. We'll be on your board. We'll help you run. So last year, get this, we reviewed 1,200 first-time funds applied to work with us at Fund Launch Partners. About 100 per month are applying. We wrote 6 checks last year. So 1,200 down to 6. We are looking to do another 19 deals in the next about year and a half. We have 2 under LOI right now. The average commitment is about $1 million. So we invest around $1 million total commitment, and then we partner with them. We're on their team. It's a GP stakes fund. Does that make sense? So I teach the game. I am in the game. This is what I do every single day. I run 2 funds right now. I've raised around $45-50 million. Well, I don't say me. Our team has raised around $45 million, and we're just getting started. We're getting going. Does that sound good? Have a little bit of authority to talk on this subject? Okay. So that's what we're doing. We're growing. Here's our social media followers, email list. And by the way, anyways, we try to dump a lot of free content. I'm sure a lot of you saw us on here today. If you like today, you can tag us on social media, whatever. That'd be my only thank you, I guess, from today. There's really no offer, no nothing today. But if you want to tag us, and we might do more of these in the future. So have your friends come or whatever. Tag me at Bridger Pennington. All right. Let's talk about y'all. Sound good? Let's change the subject a little bit. Let's look at you for a second. Let's do this. Anybody got people something to write on? Let's talk about your businesses, and then I want to bring you guys up, and we're going to talk about your stuff. So again, who is actively running a business right now? Raise them high so just so I can see them. Who's actively like a manager of a business? Great. Who is looking to launch a business then? Still in the startup phase, but you're like doing something, but you're kind of like starting right now. Yes, couple. Okay, and then. The rest of you guys that didn't raise your hands, are you just currently working a job somewhere? Are you more of an investor? What would that be? Just shout it out. More of investor category. What are you investing in?
Transitional funding,
Transitional funding. Okay.
P&Gs, and double closing.
Okay. Very cool.
So it's kind of a business.
Yeah. So it's kind of a business. I'll call that a business for this vernacular. Let's call it your book, your business. Okay. All right. Do this for me. Let's get numbers straight for a second. On your piece of paper, get a new piece of paper if you can. So get a new kind of pull it over. All of you should have a notebook. So open it up if you have one next to you. All of our I think these are Fun Launch Live 2020. Oh no, we made them generic. Okay, never mind. They're just normal. These aren't old ones. These are just normal ones. We made them generic on purpose. Okay, top of your page, write down what's your current top line revenue in your business. Top line revenue in your business or your investments for let's call it the trailing 12 months last year. If you don't have that number, do last year. Top line revenue. You got something? If you do not run a business, write down your current income then. What you make. This is private to you unless you want to share it, you can. What did you make last year? Okay, you got a top line there. Everyone got something written down? People on Zoom or wherever y'all at, do the same thing. Write it down. So top line revenue. All right, next one. Let's go. Now this will be a little different. I want to go a little bit of your P&L. Okay, so you're going to have to tell me a little bit. Every company's a little different. So we'll jump down to the bottom though. Give me your EBITDA number. And or we'll even make it simpler, just net take home. So if you had $1 million in revenue, I took home, $100,000. Does that make sense? So write that down on your page. Give me that. So sorry, let's jump all the way to the end. So revenue at the top, then what was the net take home? Distributable capital to partners. Okay, so jump to the bottom. You guys got that? Got something? Okay. Now in between, if you have or if you know, let's go your gross margins or your maybe you're selling a product, it might be your investment, but if you have those numbers, you can write an EBITDA or gross margins on the product by a product basis. Okay, so for example, a company might sell a product and we have 50% margin on that product. But then we have, our office building, other stuff and all that stuff. And then we get delineated down and we actually take home 15%. Does that make sense? So we have 50% gross margins and then we have 12% net margins. Is this making sense? Write these down on your page. I want to know what are your gross margins and then what are your net margins? And if you don't run a business, do this personally. Okay, last year I made $100,000. We spent this much. I saved or took home of that, X amount of dollars. You guys got some numbers? Got something? Yes? Some nods? Okay. By the way, you should know your numbers. Right? Numbers, the truth will set you free, right? You should know your numbers. Okay, now draw a line below those. Give me a line below those. Let's ponder this question for a second. What is the number one thing holding me or my business back? What is the number one thing holding me? And if you're just an individual, it'd be you. But if it's your business, let's talk in context of your business. Okay. So default to business. What's the number one thing holding your business back? You guys cool with that question? Now, one suggestion before you keep writing. For me, I like to write down 20 things and then circle the one that I think. So brainstorm for just write down stuff that comes to mind. There might be 10 things that come to mind, and then we'll kind of narrow them down to the top 2 or 3. Sound good? Okay, with that, I'm going to give you guys 2 minutes. Ready, set, go. What is the number one thing or top things holding you or your company back? Go. Start writing. Give me a big list. Keep writing. If you have something, start expanding upon that. Start writing it down. Play me a little bit of music if you can, some soft Sunday sounds here. Welcome in, y'all. Come grab a seat. Grab a notebook. We're just writing stuff down, so maybe grab a notebook over here. There might be stuff here. Oh, you're with these guys. Yeah, oh yeah. What's up? Good to see you guys. Okay, keep writing here. What's the number one thing holding you or your business back? Or top 5 things or top 10 things. You've solved half the problem if you can identify what the problem is. Just write it down. Write down what is the problem. What is the number one thing holding you back or your business back? Go quick. 20 more seconds here. 20 more seconds.
Somebody, please help me get over you. 'Cause it feels like I've been wasting my time in all the wrong places.
All right, everyone got something? I'm sure you do. Okay, come on back, come on back. All right. Interesting question. Sometimes it's nice to come to an event and be like, let's actually, anyways, for me at least, I'm so tied up with my business all day. Sometimes I don't even ask myself that question. Like, what is the number one thing holding you back? A lot of times, I love this. This quote has rang true in my brain for years, since the first time I heard it. The number one thing always holding a business back is the business owner, the founder. And or the business only grows as much as you do. You ever heard that quote before? Your business will only grow as much as you do. So how are you growing? Generally speaking, the number one constraint in the business is usually the founder, the owner. And we don't think we are. Right? I run 3 businesses right now. We're like, no, it's not me. It's freaking Joey down here who sucks at marketing. It's his fault. And it's like, hold on, wait. I look at Adam because of marketing. But it's like, hold on, wait. How did you incentivize little Joey? Why did you hire Joey? What kind of parameters around there? Have you allowed them to grow? Have you put the right seats in the bus? Anyways, that's one note. But there actually are real things that sometimes stop us from it as much as we are. So let's talk strategy. Let's talk team. Let's talk all sorts of stuff in our businesses. Does that sound fair? Let's do this. You guys okay with sharing? Some of you okay with sharing? Give me like a nod if you'd be okay with sharing what you wrote down. If you're not okay, that's totally fine too. You don't have to share. Let's do this. I'm going to have you all stand up in just a second. My introverts, don't run away from me, okay? Okay, don't run away. I always tell you my introverts, stay with me, okay? Extroverts, grab the introverts, bring them in. What I want you to do is I want you to stand up. We're going to get in groups of 3. I want you to come with 3 people that you did not come here with. I want you to not know who these people are. I want them to be strangers. So break up. If you came as a partnership or something, break up. 3 people, briefly get to know each other, and I want you to share. So what we're going to do, if it was me, if I got up there, I'd say, hey, good to meet you guys. I wrote down, and you can share your numbers or not. If you don't want to share, you can just say pass. I'm totally cool with that, 'cause sometimes stuff is private. But if you're okay with sharing, say, here's some of my numbers, and this is where we're at. This is what I believe the number one constraint of my business is. Okay? And then stop talking. And let the other 2 people ask questions and or work on your business for the next 3 minutes. Does that sound good? And then we're going to switch. Maybe we'll do 4 minutes. We'll see. Then the next person will go, hey, I'm Bridger. Here's my numbers. This is the number one thing holding me back, I believe. What do y'all think? And I think it's usually good to ask a few questions. Like, well, double click on that for me. Tell me a little bit more. Great, we can explain a little bit more, but let them talk. Let the 2 people then tell you. Anyways, you can learn things from anybody. Even if someone is not even in business, they can sometimes point out blind spots pretty quickly. Does that sound good? Introverts, stay with me. All right? You guys cool? Okay, let's do this. Stand up. I want you to high five, meet some people. Actually, let's do this. Yeah, stand up. Sorry, don't high five yet. Just go around. But you can high five if you want. Find 3 people. Get in a group of 3. Split up if you're somebody who came here with somebody. Play some nice music if you can, team. Introduce yourselves real quick. Groups of 2. You 2 over here. Yeah, come over here, you 2. Come over here. Oh, shoot. Just join these 2 right here. Or you guys are at 2 as well. Yeah, join these 3, and then you join those 3 as well. Yeah, right there. All right, ready, set, go. Start going. Looks good, dude. It's sweet. Looks awesome up here. I'm sorry, I didn't recognize you. You look taller than I remember. You walked in, I was like, dang, you look freaking tall, bro. Oh, am I muted now? Okay. I was like, dang, you're like freaking, maybe I just see you when you're sitting down, like working the computer. That's probably why. All right, start rotating, start rotating. Hey. Oh, shoot. Okay. Good to see you, bro. Come to the event on June 12th. We're doing like a single asset fund event. That'll be here, yeah. And we'll do like SAP stuff all day. Because that's what we kind of do. You've been here before. We've done like.
And it really is iterative. I'm like, okay, I'm like getting closer and closer, but I'm going to Bitcoin next week.
Oh, cool. Yeah, cool. Let me know how that goes. That sounds fun. It's in Vegas, right? Yeah, that's fun.
Should be like a firehouse. What's going on?
That's pretty cool. Yeah, that'll be pretty cool. That'll be pretty sweet. Okay, see ya. How you guys doing? You guys still on like one person or two? Which number are you on? Have you all gone yet? You've all gone. Okay. Okay. Sounds good. Have you guys all gone yet? Have you all circled or still going? You get 2/3. Okay. Keep going. Keep going. I'm getting a pulse. Okay, get to that last person, last person. All right, start wrapping up. Start wrapping up. Come on back. Come on back. Come on back. Start wrapping up. Come move back to your seats here. Hopefully you met some good people. I'll give you a second to wrap up. Come on, just work your way back. Share some contact info. You're good. You guys can keep sharing. You're good. I'll leave you for a sec. All right, not too bad, hey? Met some good people. People you want to share your phone number with. That's awesome. Let's do this. Hopefully that got you talking a little bit, thinking about your business, maybe some ideas. I'd love to pick on a few of y'all and work on your business. And maybe as a group we can work on your business. Does that sound fair? So what I want to do, we'll use a mic. I'll probably have one of you come up here, and I'm going to try to go relatively quick, which is hard for me sometimes. I love to do double click and triple click, but we're going to try to go fast so we can get to more people, I guess is what I'm trying to say. But I want to we're in person. Why not? Let's work on your business. And by the way, it can be in context of a fund or just in context of general business. And if I don't know an answer, I might put it out to the audience. Hey, I don't really know much about that. Anybody else in the audience want to chime in and help on that? Does that make sense? Let's do something like that. Anybody brave enough to go first? Feel like they have a constraint, a problem in their business that they would love me to think through and or the group think through publicly. Yeah. Anybody want to share?
Mike, I'll share.
Mike? Okay, hold on. Wait. Let me get you a mic.
I'm not a business owner, but I'm looking to create a fund.
Yeah. Well, clap it up for Mike, everybody.
Thank you, guys. Thank you.
Yeah. So what's going on, Mike?
So I'll stand up.
Yeah.
But
and I'm going to take notes right here as we're going so people can kind of see, and then we'll write it all out.
yeah, I appreciate it. So I actually just recently walked out on my corporate job. I was making great money. I'm a financial advisor for Fidelity Investments, technically for the next day.
Come up here so the cameras can see it. Yeah, just come up here. Yeah. So you walked out of Fidelity Investments.
Walked out of Fidelity.
Yeah. So what are you doing now?
Investments.
What's the plan?
The plan is to create my own fund. So I was raising a lot of capital for Fidelity Investments as a financial advisor. I actually ran a book of business about $250 million
Cool.
for about 250 households or so. And I just got tired of kind of raising capital for Fidelity and said, hey, why don't I go out and do this on my own? So worked through some of that.
Have you launched anything yet? Or you're still in the beginning phases?
I've never launched anything. I actually got
Cool.
your single asset fund program.
Oh, sweet. Well,
So
yeah, awesome.
I'm in the midst of that, and I think some of the biggest hurdles for me was the legal structuring.
Mm-hmm.
So the legal structuring, did a lot of research. It actually doesn't seem too complicated, but I actually need some legal help.
Yes. Yeah. So what can we help you with? What's the biggest thing holding you back? Biggest constraint?
So that, a little bit of raising capital too, right? That's kind of, I probably have about 500K to maybe 1 million in soft commitments from friends and family.
Okay.
So raising capital, legal structuring. And
So
then,
let's double click on those for a second. Those are two good ones.
Sure.
What about legal structuring is confusing or holding you back, or can we get more specific?
yeah, so it's become more, familiar as I've done research with the LP, the GP,
Mm-hmm.
and the management company. But I guess actually finding a good securities lawyer to, with credit.
Mm-hmm. Put
to
it
their
together.
name.
Yep.
Yeah.
Okay. So, and you're doing trading, so you'll be more the hedge fund category,
Yeah, correct.
and you probably want to know licenses and or things like that. Correct.
Yeah,
Right.
yeah. So I figured that I could work under the exempt reporter advisors.
Yeah.
Act.
So exempt reporting advisor.
Yeah.
Which is most likely, and we can share with the group what that is. Are you going to be under the CFTC or CFA? Like it's not CFA, but CFTC. You're doing futures. You're doing option pools. You're doing
Yeah, so-
leverage trades.
Not too much leverage, just mainly like cash secured puts and calls.
Okay.
So it's going to be pretty much backed by all the assets
Okay.
in the fund.
Yeah. Very cool. Okay. Well, we can touch on that.
Sure.
Legal structuring. Well, you're in our single asset fund program, so we actually have the lawyers for you.
That's
So
wonderful.
yeah, the lawyers are all in there, so we can make sure that's done the right way, and it's all built in there. We just talked obviously about the GPLP structure,
Sure.
right? I'm guessing you do the same thing. Set up your management code. This management code, this would be the exempt reporting advisor, right?
Great.
That would be what you're gonna qualify as that. And if people don't know what I'm talking about here, so who do I register with for funds? If you're under $150 million, you fall under the state level. If you're over $150 million, you fall under the federal SEC level. You're not in both. You're in one or the other. And this is AUM. I'm guessing you're going to be under 150.
Yeah.
So you would fall, and you're in Utah.
Yeah.
So you'd fall under Utah State Division of Securities. Okay, that's where you would fall under. Now, they have also given us something cool called the Exempt Reporting Advisor, ERA, which you just mentioned. So you already know this, but I'm just going to tell this to the rest of the group. It can be an ERA. You're between $25 million and $150 million, and you're under the SEC, but you don't need like a license. You don't need a Series 65, and everything's a little different, but as far as the licensing goes for this registration, you do not need a license. So my two funds that I currently run are both exempt reporting advisors because we fall under this category. We're probably going to get over this in the next year, so I'll go get my Series 65, which is a license. Awesome. But currently we fall under an ERA exemption. Is that making sense to the audience? Okay, pretty cool. Anything you want to double click on legal?
No, so I actually have a Series 7, Series 63, Series 66.
I was going to guess. You probably have a bunch of
couple
licenses.
other
Yeah.
Things which I'll leave with like a holding company.
Yeah.
But yeah, so the legal structuring was really kind of mind-blowing to me because I'd never even thought of doing my own fund.
Yep.
Well, I have, but I never actually went forward with it.
Went and did
until
it.
now. So,
A couple things, and you'll see this inside of single asset funds, but we walk through like a full launch procedure. So you make sure, like, and I'll zoom in for a second here. You make sure you have your LPA PPM, your subscription docs, your entities are formed. You file a Form D with the SEC, a Form AD fee. You'll file with FINRA, and you'll report as an exempt reporting advisor. And then once you start raising money, you file blue sky filing. So you notify the states the year. It's usually within 15 days. So if I raise money out of Colorado, I got to notify Colorado I just raised money from your state. It's called a blue sky filing. So all things that we help you with, though, we'll get that all figured out.
that's awesome.
So let's double click on capital raising, though, which I think could be more applicable to the rest of the group. Let's double click on that for a sec. So, Mike, you've already raised $250 million.
So
But through Fidelity, which is much different than
Yeah.
raising money on your own.
the big green
Yeah.
machine like BlackRock and
Yeah,
those
oh, yeah.
guys too. So
So far, you mentioned you've raised $500K, roughly.
about 500 to a million in soft commitments
Okay.
between
500.
friends and family and
Okay.
network.
And it's been friends and family, network,
Yeah.
friends, family, and fools, right?
Yeah, I
the
love
three Fs, Great. And are you obviously you're in the setup phase, it sounds like. You're still in the setup phase.
Yeah, setup phase.
And you're kind of getting validation right now on what you're doing.
Yep.
Very cool. Let me, if I can,
Yeah, of course.
I'll walk through a framework around that I use for raising capital, and maybe it'll give us something to work off of, and then you can double click more. Does that sound good?
Yeah, absolutely.
Okay, is this useful with you guys? We'll dive into capital raising. So if you guys can see my screen, and by the way, what I'm showing you is the fund launch formula. It's kind of our big framework. I like frameworks. If you guys can't tell, I like things that can plug into lots of scenarios, but are true across industry, across time. A lot of these frameworks we vet out like crazy. It takes us months to build a framework. This is a framework I've used for raising capital. Okay, looks like a funnel here. You can kind of see. I'm going to zoom in, but here briefly you see what I call getting in the room, connecting in the room, and closing the room. What that means is, are you around people with money? So so if someone's like, Bridger, I'm struggling raising capital. I go, great. Are you even around people who have money? Like, are you even in the room? Okay, yes, I'm Bridger, I'm in the room. Okay, cool. You're in the room, but do you, what I call connect, or do people see you as someone who could actually manage money for them? I have a good friend. His family's very wealthy. He gets in a lot of nice rooms. But no one sees him as someone that could manage money. Does that make sense? There's a difference of being in the room versus someone who's actually in the room and I would invest with Mike, and here's all the reasons why. And the purpose of connecting is to bridge that gap to then actually pitch and close. This is where you have your pitch deck, you're in the boardroom, you're actually pitching and closing someone. So 3 distinct phases or stages of raising capital. Is that you follow along?
Yep.
So for you just started raising capital. Maybe rank for me, what do you feel like you're best at on these 3, and what are you worst at?
I would probably say, I would consider myself like an introverted extrovert.
Okay.
So I could be better at connecting in person.
Okay.
And probably getting in the room.
So those 2.
Yeah. Yeah.
But once they're in the room, you can close.
I've closed before.
Yeah, which I actually totally
yeah.
believe that. Looking at you right now, I'm
Yeah,
like,
yeah.
I bet Mike would close me if I'm in a room.
I can close people, yeah.
But how do
Honestly,
I get
give me a
more
chance.
rooms and then connect in those rooms?
Exactly.
Cool. So let's talk about these two, and then we can come back to close if we want. But does that sound good? Maybe for you guys too, you can go through which one works for you and which not. And by the way, this changes.
Yeah.
Like there's been times in my life where I feel like, man, I'm getting all these great rooms, but I can't close anybody. And then other times in my life, I'm like, oh, I'm closing everybody, but I got to get in more rooms. So this changes all the time, at least for me.
I second that.
Yeah. So right now, though, you're in this phase, right? I'm getting in more rooms connecting. So let's talk through how to get more rooms. Let's talk rooms here. You're going to just see it usually pops up, but I divide this into two categories. There's rooms that you work your way into. There's rooms that you buy your way into. Okay? Those are the two categories. And here's a few examples. You have like LinkedIn, networking groups, so like meetups like this. You don't have to buy to come here. You came for free. You had to work, though. Like these rooms, you got to work. You got to show up. You got to be here. And sometimes the room's not good. Sometimes it is good. Okay? Social media, events. Okay? A lot of great ways to work a room. Other rooms, you can buy your way into a room. Ferrari Club. I love this example, but like, if you buy a Ferrari, guess what? You're in the Ferrari Club.
Yeah.
And every city on earth, we're in Salt Lake City, there's the Salt Lake City Ferrari Club downtown. They have the Lamborghini dealership has a club. And guess what you have to be in the club? A Lamborghini, okay? Hence, you have to buy your way into those rooms. Box seats, I share a story about my dad. They bought box seats years ago, and it let them get through gatekeepers, right? Allowed them to call, hey, we got box seats at the Utah Jazz. You guys want to come out tonight? And they'd invite wealthy people around them, and that would get them in more rooms. Is this making sense? That's pay to play. That's work to play. I'm a big believer in doing both. I'll give you two examples, though. Like this is me, Bridger. I joined a mastermind group. It was 20. Oh, shoot, too big here. It was 24. Sorry, my first one I ever joined was 30,000. All it was 3 events in a year. You paid 10,000 per event. We flew around the country. But guess what? Everyone there had also paid 30 grand to be there. Very qualified room. A lot of grades, like 100 people. I was like, man, this is it was 3 days. I was working. I met some incredible people, right? They've assembled those people together. There's another one I joined for $24,000. They did 4 events. We joined another one last year. It was $150,000. They did 4 events. Bridger, now, I've got some money, but 150 grand, that's a lot of money. Why would you join that? Well, we wanted to learn some stuff and meet some people, but also, everyone else there had also paid $150,000 to be there. That alone, that barrier to entry is one of the reasons I wanted to join. Does that make sense? Country clubs, golf, there's all sorts of examples you can give, but it puts you in the room, right? Anything you want to double click on that or go further on?
No, that's great. I think one of the biggest hurdles, and even just like feedback for your business personally, is like how to know if someone's legit, right? Like I saw your YouTube videos, absolutely loved them. But then my friends told me, hey, Bridger's legit.
Interesting.
So that was kind of for the pay to play, right? Is like, hey, how do you know who to pay to go play with?
Well, and to be frank, you can get recommendations and stuff.
Sure.
A lot of times, though, like I like to do both, right? I do both here. I do free stuff. And by the way, you're going to go to stuff that isn't going to be worthwhile.
Yeah.
And that's just the nature of the business.
That's the nature of the game.
Like anybody, like you guys go to this a lot. I know you and Ginger go to tons of it. I see you at every event I ever go to. She's a carnivore. Actually, real quick, can we share the mic with? Walk us through. I know you go to a lot of events. Yeah. I'm guessing some are good, some are bad. How do you discern if I should go to this event, go to not go to it? Like, and Mike's, we'll come back to you in a second. You can stay up here if you want. But
that's a great question. You kind of get to know the community, and you know who puts on a good event, who doesn't put on a good event. Sometimes you go to an event because you have a targeted intent to meet a certain type of person or group of people. And so when you look at events, you want to consider that. What type of people do I want to see and meet at this event? And what do I want to accomplish today? I think if you just show up and say, well, I'm just going to go, that's a lot less productive than thinking, here's what I'm trying to do today, and the type of people I'm trying to meet, or here's my goals, and how can that serve me? So I don't know if that directly answers your question.
Well, I love what you said, clear intent.
Yeah, you have to have a clear intent.
You got to have a clear intent. How many people today came with a clear intent? Maybe sometimes you do, sometimes you don't. But if you come to something with a clear intent, generally speaking, a lot of times you get that intent. which is kind of cool. So, but I'm guessing you guys go to a lot of events.
Yes, we do.
And I bet half are great. I don't even know if it's half.
Yeah.
What percent are great and what
Yeah,
percent
I mean,
are crap?
sometimes you go to an event and you'll talk to one or two people and it's nice and you meet some nice people. And sometimes you really make an amazing connection with someone who can help you answer a question or solve a problem, or really gives you an idea that you hadn't thought of before.
Yep.
And those are always really fun, right?
Yep.
And those events are, like you say, the paid events, you're probably going to get more quality. But I wouldn't play out the free events at all. You'll meet some amazing people at just free events. And my wife, Ginger, is really good at identifying those events and getting us there. But there, in this community, I'm going to go back and make the Utah pitch again. Tell all your friends it sucks here. They don't want to move here. I'm lying, of course. There is a great community here in Utah, and a lot going on. Just through the local technology community and the business community, investment community. It's really, really warm here.
Yeah.
So
I would agree.
you can find
agree.
things. You can find things almost weekly here to go to.
Yeah. And you're going to kiss a lot of frogs.
Sure.
And some will kiss you back and some won't. But you're going to kiss a lot of, meaning you're going to go to a lot of events. And I've had people come, I went to that event, it wasn't good. I'm like, well,
We'll go to another one
saddle
then.
up, buddy. Like,
Yeah.
I'll tell you last year. So Lincoln, my business partner, he was the main guy raising money. We raised about $30 million last year. He went to roughly 24 paid events around these were out of state, like flew to, attended, like these are big events that he went to. 24, about 2 a month he was going to. We were in New York. We went to we joined the Greenwich Economic Forum with Ray Dalio and his other groups. Like we joined a bunch of stuff. Of the 24 events, these are paid events. He was in Miami. I mean, he went to every city to raise money. I think if you asked Lincoln, I bet 12 to 15 really didn't have anything meaningful come from them. I bet 4 to 5 raised him $20 to $22 million.
But can I add to that?
Yeah, go ahead.
You should never underestimate the person you're talking to. You never know who they're going to be tomorrow. You might be working for them someday. So,
well,
I've experienced that. You interact with someone, you're like, well, they're interesting, and then 3 years later, they're really doing something significant and amazing.
Yeah.
So it's just a great way to meet people. You can learn from each other, and you just don't know who's really going to be moving in the future. You should treat everyone like $1 million and expect to be working for them someday.
Yep. People can
Just a
change.
thought.
That's a great point. People move and change a lot. To Lincoln's, back to his events, 22 events, a handful raised him like $20 million. The other ones didn't raise him much. And plant a lot of good seeds, though. A lot of good relationships that they're probably going to be fruitful in 3 or 5 years from now, which is a great point that you made. And actually, it's funny enough. I'll share this. On this event, I went to this $30,000 event. Really nothing fruitful came from it for a year and 2 years. And then 3.5 years later, like a bunch of investors, partners, people, I was like, oh, remember we were in that group 3 years ago? And then we're like, oh, introductions. It was very interesting. Like I didn't see the fruits of it for like 3 years. And I'm like, oh, now I'm like, that 30 grand was the best money I ever spent. And at the time though, I was like, I don't know if I should have spent this money. Very interesting. But back to Lincoln is like, of the 22 events, he wouldn't know which 4 were the best to go to. So he had to go to all 22 or 24 of those events to find the 3 or 4 or 5 that would have been fruitful. Does that make sense? Okay, we hit on this enough. Let's go to the next one. Let's talk about connecting. So you're in the room. You got to the place. You showed up to the event. How do you connect or work a room in a way that gets people to know, like, and trust you and see you as a person of value that they want to follow up with, share a phone number with, connect with? You know what I'm saying? Like a lot of times you'll go to an event, you'll meet 50 people, and you'll remember the 1 or 2. Why do you remember the 1 or 2? And how can you be the 1 or 2 that everyone meets in the room? It's like, oh yeah, I'm going to save Bridger's number. Because man, that guy was interesting. I got to follow up with that guy. Does that make sense?
Yeah.
Any comment? Or
Yeah,
anything you want to double click on?
Yeah, I'll comment on that. So I'm introverted normally, right? And I raised my hand to come up here for this very reason, so I can tell my story to everybody in this room and even you.
Yeah.
So
I love it. When you've made yourself, obviously, that's a great point, like Inception, like right now, what you're doing at an event that we're currently at, right? Now everyone knows who you are and wants to maybe talk to you or meet you or maybe not. I don't know. We'll see.
And just to add to that, like I have a lot of connections in the space in real estate and tokenization. My guy over there, I don't know where he went. But I got a lot of connections too, so I don't want to just take, I want to give back.
Yeah.
So I got a really good network.
Well, yeah, let's talk about this for a second here. Now, I'm going to share a few things that have worked for me. There's 1,000 different ways to raise capital. There's 1,000 different ways to meet people and other stuff. Does that sound fair? Little caveat, but I'll share a few things that have worked for me. Sound good? If you're with me, say yes.
Yeah.
All right. So, a few things that have worked for me. Number one, people like to work with and meet other people that they feel like that are at the same or above status as them. Same or above status as them. What's generally happening at events, people are meeting each other. Hey, Mike, good to meet you. What's going on? Hey, and what's the common question everyone asks? What do you do, right? Now, some people will tell you, don't even talk. Try to get to that question. Try to talk about family and fitness and everything else besides that. But generally speaking, most people end up asking you, what do you do, right? Orrin Clafford, in his book, he talks about a flash roll. He has some kind of prepared 15 to 20 seconds, very quick, that puts out hooks for people to show that he's a high value person, very briefly. Does that make sense? Now, people do this in different ways. Some people, I think, do it in a kind of a jerk way. Oh, you should, like, my car on the way here, it's like an $800,000 car. And you know what I mean? People do that to try to, like, flex on people. I don't know. There's different things people do to posture, and it's very interesting. I would not recommend that. But what Orrin Claff talks about is being a person of value, though. People still need to know that you're a person of value, right? So a couple ways to do that, to be a person of value. Number one, be a person of value. Yeah, we can like fake it or posture, but actually just be someone of value. I always use this example, but like, what's the easiest way to date a 9 or a 10? Like a 9 or a 10, like everyone's like the hot scale, like 0 to 10. The easiest way to date a 9 or a 10 is to be a 9 or a 10. Now, sometimes people that are a 6 date a 10, and we make movies about them, and we put Adam Sandler as the star, right? Why is Adam is always the star? Well, at least he was. I don't know about it anymore, but anyways, that's hilarious. We make movies because it's so rare. The easiest way to find partners, people, is to also be someone that they want to partner with, right? And so how do you do that? Well, you sharpen the axe, right? You make yourself better. And you come to stuff, you build yourself into a person who people want to partner with, who actually has the stuff, okay? That's the first thing I would say, actually like, be the real thing. And understand where you're at. It's funny, I met a billionaire a while back. I literally had nothing to offer this person. And I knew that. And I was just like, yeah, it's funny. I have not, like, what do I offer a billionaire? Meaning, how could I give to this person? What could I do? What value do I provide to this? And the context, it wasn't even related to my business at all. Like, he was like a totally separate billionaire. Like, not even connected. And I literally sat there, I was like, I have nothing to offer this person. And so I went back home and I was like, well, what could I offer this person? What do these people want? I was like, well, a lot of them want to give back. A lot of them want to share and like have a legacy. A lot of them want to teach financial education. So we launched a company called Alt Street. We hired 2 or 3 people from a masterclass. And what we've done is we've contacted a bunch of these wealthy billionaires, say, hey, do you have a book or a course or something? You know what? We're going to do this for free. We'll fly out our team to your office. You got to give us 3 or 4 hours. We have a Wall Street Journal interview. It's going to interview you, and we're going to put this whole thing together. It's a full course, and you can share your lessons, kind of like masterclass, and we're not even going to charge for it. We're going to put it for free on our platform because we believe in democratizing Wall Street. Like literally that spout. Now, we had a bunch of people working on it, but for me, I was like, dang, that's a cool way that I can meet. Someone doesn't need money, doesn't need contacts from me, but I can give them access to like an audience. So now all of a sudden, even though Bridger, my net worth is like this compared to a billionaire, I now can provide value to that person, be a high value person in an area or field. Is this making sense? Okay. So back to, connect in the room. There's 1,000 different ways to do this. But something that I use is this all the time. When I go to events, if we meet, what's up? Good to meet you. We're talking, we're meeting. I'm going to talk about you the whole time. I just tell me about you. What's going on with you? Tell me about you. What's business, family, kids. Eventually, though, people will ask you about you, which is great. And furthermore, if people talk about themselves, they usually like that conversation more than anything else, right? People love to talk about themselves. So I'm going to get you talking about yourself as much as I can. You're going to ask me about me. I go, hey, I'm Bridger. Yeah, I run 2 investment funds right now. We manage about 50 million, and then we have about 100,000 students in fund launch. We got a decent social media, 400,000 social media followers, so we help people online do that kind of stuff. Well, tell me about you again. I've just dropped like 4 hooks, right? I run funds, I've raised capital, I have 100,000 students. I'm dropping, and then I'm like, hey, I don't want to talk about me, tell me about you. Now someone, a lot of times, they'll, no, hold on, double click on that for me. And they'll start driving, well, what do you, well, yeah, we run a blockchain event, we do this, and then we'll talk a little bit more. Generally speaking, though, what then I'll talk, and if that's interesting to them, I'll talk about my funds and whatever, explain that to them. The line that I love to use, though, is, hey, we're leaving, we're parting. Good to meet you. And I'll use a different hook. Maybe they want to do education, I'll use that hook. But if they're like a fund person I'm raising money for, trying to raise money from, I'll say this. I'll say, hey, I've got 2 funds right now in this big group. I see deals all the time, and they're actually really good deals. Because the nature, I run like a crypto fund, I can't do most of these deals. If I get a good deal across my desk, do you like looking at deals? I could email it to you or send it your way. I get a lot of good deals every week. Would that be useful to you? 9 times out of 10, if someone actually is a investor player, they're like, oh yeah, who doesn't want to see more good deals? Great, can I get your email? And sometimes we'll share email contact. And what I do is I go back home and I try to build a list. You kind of see this here. I am building a list of people. And now, a list is a broad term. All of us have a list right now. Your phone contacts is your list right now. Some people have a formalized email list or a spreadsheet. Like we have how many emails are on our list, Adam? About 300,000 emails. We actually have a fund launch email list, okay? It could be a big list or a small list, but I'm going to come back home and put them on my list. And that list, if you guys have been on email lists before, I'm trying to add value to that list. It's jab, 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 right hook, right? So I'm going to add, you see the little email icons, and whether they're on my social media list or affiliate, whatever it is, I'm going to try to add a lot of value to these people. I'm going to send them deals. I'm going to invite them to a thing that's going on. I'm going to have them come speak to my group. Oh, you should come. We're doing this free Fun Friday thing. You should come and speak. Be on stage. We'll get video shots of you. It'll look awesome. Or I'm trying to find a different way that I can provide value to people and build my list. I would invite all of you right now to start building a list. Even if you're not raising capital or you don't have anything going on, just build. It's just your Rolodex is what it is. Build and work that Rolodex. Follow up with people. Set whatever, it's a golf tournament. I don't know whatever you like to do, skiing, golf, whatever the thing is. Start building those relationships in this thing to build your list. Because then it makes it way easier to then get to the transition to close. One last thing I'll share, and then we'll get off this topic. Actually, maybe 2 things. Back to the fund launch formula. Now, you might be sitting here like, Bridger, I'm not that guy or gal. That's okay. If you're not this person that's like going to events, meeting people, partner with someone who is. Okay? If you're like, oh man, that just sounds like some people love this game. And there's 3 distinct partnerships in every fund. These are the 3 right here. Partner with someone who naturally does this. Partner with Ginger, who's been at every event for the last 2 years that knows everybody. You know what I mean? Like she naturally goes, loves it, and I'll give both you guys credit, but I'll give Ginger credit here. Find someone who's like, they just love it. They go to events, they already have their Rolodex, but they don't know how to invest. They don't have your experience, right? They don't know how to put this all together. Yeah. Okay, I'll pause. What's making sense? What do you want to double? Anything? What's not making sense?
No, it's all pretty cut and clear, and I mean, that's the reason why I'm here. I'm trying to get out of my comfort zone, connect with people, make myself known. But naturally, it's a little uncomfortable for me.
Yeah.
But seeing everybody else here gives me a lot of confidence too. Like it's cool to know we're all kind of in the same boat, which is awesome. One of my buddies actually, 3 of them came to your events, but one of them flew out. I think it was Florida or some other state, and he said the best part of coming here was meeting the people. And he left Goldman Sachs, had no job. Long story short, he just closed his first real estate deal, sold a piece of land, wholesaled it, and made a $350,000 paycheck.
That's cool.
He was driving into work every day, barely
awesome.
Making rent, not having enough gas.
That's awesome. What a cool story. That's
the
amazing.
story was to be around like-minded people,
Yeah,
so
be in
he
the
was
right
in
room.
his office every day.
That's amazing. That's so cool. Well, Mike, sorry, we talked here forever. We've been double clicking on this,
Yep.
and I'm going to keep adding to this. You're going to suck at this. We're all going to suck at this, and we're just going to suck less and less and less. But you just keep doing it.
That's
You just
why I'm
keep
here.
showing up, and you're just like, oh, Like people are like, Bridger, how do you speak on stage? And I'm an okay speaker. I don't know if I'm an amazing speaker, but I'm an okay speaker. Well, guess what? I just started speaking, and I sucked less, and then I sucked less, and then I got kind of okay, and then I got, I don't know, somewhat good. You guys can rate me as a speaker, but like, how do you public speak? You just start doing it. How do you meet people? You start doing it. You suck less and less. So, Mike, thank you so much. Clap for Mike,
you.
everybody. Well done, well done. Thank you. All right, remember I said I was going to go faster, people? That was like way too long. So we're going to try to go faster. Who else? Who else would like to share what you wrote down? What's the biggest constraint in your business? What's holding you back? It can be fund related, like we just did, or it can be not fund related. Yeah, you want to go? Come on up here. Remind me of your name. Kemish. Clap it for Kemish, everybody. Good to have you here, Kemish.
Thank you. Good to be here.
So give us 20 seconds on you, your business, maybe revenue if you want to share it, and then give us your number one thing that's holding you back or stopping you.
Yeah. So, I mean, revenue, we won't talk about that because this is a new business. We're actually getting ready to launch. We're under contract for property in Payson to do 55 townhouses in Payson.
Yep.
So we are in the design phase, talk with architects, with the civil engineers. We're also in the capital raising phase. So we're trying to raise $3 million.
I spell that right?
Yep, that's right.
There we go. And how many units again?
55.
55 units, and you're trying to raise
$3 million.
$3 million. Okay.
Total project cost will be about $20 million.
Okay.
We've talked with banks. We need 30% loan to value.
Okay.
We're going to phase the project, so we need the money for the development up front. And then we want to develop the whole property, and then we'll phase the construction on the townhouses.
Okay.
So that will reduce the loan commitment and holding costs. We're looking at an 8% preferred return for investors, 20% target IRR on the deal.
So 8% pref.
Yep.
And they're getting a split above that, like an 80-20 split, or what's the split?
80-20 split.
80-20,
on
okay.
the project.
Okay.
80-20 equity split.
80-20, and targeting a, what was it again?
20% IRR, internal rate of return.
20% IRR. Okay. Cool. That's sweet. So what's the number one thing holding you guys back?
I think the biggest thing right now is just raising capital. We've pitched it to some people. We've targeted mostly people who we know who are now high net worth individuals who could take down the whole project themselves. Just do one partner.
Yep.
We haven't quite.
What's been the
pushed it out.
feedback? What's been the feedback so far when you've been
We've had
doing
good
this?
feedback. We haven't had anybody that has said no to us yet. We've had one person, I guess we did have one that said no. They just said it wasn't the right time. They said come back
Yeah.
on the next phase. We have an opportunity to purchase another lot down there that would be 92 units. So
Okay.
we get this one done. We'll roll into a 92 unit project right afterwards, hopefully.
Okay, cool.
So
So
our goal on this first is to make this a win for our investors. We want to create a long-term relationship
Yeah.
with them so that they would just say, keep the money, roll into the next project.
yeah. So, but as of today, a couple verbals, kind of some in-betweens, but timing's not right for some.
Timing, yep, we had one that said, yep, timing's not right.
Yep.
Didn't match what they were working. They had some other things they're working on right now.
Okay. And how many, I'm going to zoom in on this for a second. So to frame this out, then I'm going to ask you a question. So the way we like to teach funds, and this is the same with business, but funds in general, we talk about it like this. If you guys can see my screen. So you're going to find, which you guys already have, a deal. You're going to find hopefully asymmetrical risk or a trading strategy, whatever. You're going to back test it and really figure out, does this thing work? Okay. Team around it, all that kind of stuff. Next, we're going to frame it out, which you've already done. So how is it going to function? People are going to come in, they're going to 8% pref, 80-20 split. It's going to be this timeline, this much, figure out all the details it looks like you've done. Great. And you've done the exact right thing. Go to and try to verbally raise money. Okay. This is how we teach people how to do it. So go verbally raise capital, get commitments, and that's why I asked you what's the feedback. Because what happens, you notice it's a circle, you get feedback. And people sometimes are nice. Oh yeah, it looks good. I'm just, and you go, no, come on, for real. No, it's good. I like you guys. No, for real. Like, why did you say no? No, I want to put money in. Okay, can we get $100,000 from you right now? Well, okay, no, tell me the real. I'm here for feedback, right? Oh, well, I didn't love your team on it. Then you have to ask them like 3 or 4 times. Then they'll tell you, well, the structure just a little bit rich for me, and they'll start telling you. And what happens is you'll come back through and you'll tweak your deal and strategy as you go for the goal of getting validation. You're trying to get validation that this idea that you're working on is actually people would put money into this. People like it. They like the structure of the team. And then and only then, we jump to legal. We then set up the whole legal setup. And then we officially launch. Here's launch. And then once we launch, we then go and do our first closing, actually get the money wired in, capital markets. We then buy and do asset management. We're growing the asset, and we do firm management. We're building the firm. We do that kind of forever. Okay, so this is the life cycle of someone launching a fund and then managing a fund. Was that pretty good? Crash course in the fund launch formula? Not bad? So in that context, it sounds like you guys are kind of right here going through this, right?
Sounds like we probably need to go through this a few more times, get the real feedback, find out why. I mean, one feedback we have had is we've talked to, because like I said, we've talked to some high net worth individuals. A few of them have actually said this deal isn't enough money. Like it's too small of a deal. You know,
yeah.
a $3 million commitment, $20 million project wasn't big enough. And we've tried to go back to them and say, hey, well, we could actually roll this 92 unit next law into it, you know, make it a bigger deal. But that's one feedback we've got.
In this, how many people have you actually pitched right now?
I'd say we've probably sat and pitched 10. You think 10?
10 to 15. Decent sample size. Today, though, and then like strong verbal, like real, like you would actually believe they would come in verbal commitment of the 10 to 15.
So we've had one guy, a couple guys that have said like they really want to do it. They're like there, but they just haven't got that commitment. Haven't got, you know, they've also gone kind of like not ghosted us, but they're busy at work. We haven't got like back with them, you know, and it kind of just keeps getting pushed off.
Okay. Anything else you'd add to that? No. Okay. So decent sample size. Like I said, I'd get the real feedback. And I mean, I love this quote. This is one of my favorite quotes of all time. When you ask, do you guys maybe you know this? When you ask for advice, what do you get? Money. When you ask for money, you generally get advice. This is so true. When I heard this first time, I'm like, that is the most true thing I've ever heard in my life. When you're going and pitching these groups, are you leading in like, hey, we're looking for money? Or are you leading the call like, no, we're looking for advice? How's the frame going in?
Technically, I guess we probably said money. I mean, we frame it as we have this opportunity. We're pitching an opportunity for them to make money.
Yeah. Maybe a suggestion on your next few, or people maybe you have in your space, I would text them and be like, hey, we're putting together this project. I know you've looked at lots of real estate deals before. Can I get your advice on it? We're trying to raise $3 million. I wanted to see, how would you structure this? How would this appeal to people like you? See what happens. It's so funny. I've made this mistake so many. Anyways, I would be very curious to see how that goes.
I like that actually, because one thing we've talked about, because this is our first development project, and I've built before, but this is our first development project, we're actually quite open. You know, like we said, we're in this, you know, kind of that design phase, you know, structure and frame it, and we're okay to go back through that. I mean, we've looked at this. Our plan initially was to build and sell these units, but it can make a lot of sense with the right investor to build to rent. So we're actually taking the advice route. I think would be good, because we're saying, what would you advise? What do you want to do? And then it becomes something that they would like to do. And they could be like, actually, I want to invest in that. I like that.
No, yeah. Me and Dan, my partner, we've made this mistake so many times, and now it's so funny. Like when we go to people, we run a crypto hedge fund. Crypto doesn't appeal to a lot of people. Some people like it, some people don't. When we go into a family office and we're like, hey, we're ready to pitch you guys, like always zero. But when we go in and like, hey, I want to ask you the question, could we position our fund to appeal to a family office like yours? Could you have 11 minutes of your time? We could walk through the pitch and you give us a little feedback. We talk to the CFO of the family office. Oh yeah, I can do that. So we walk them through, we pitch them, just like normal. We pitch them. Okay, here's our pitch. So what do you think? And they go, man, that's pretty interesting. Huh. Man, if I was you, maybe you tweak this or double click on this. And they're like, are you guys actually raising money? Well, yeah, we're actually doing this deal. Huh, well, we might be interested. Can we do another call next week? It's so interesting, the dynamic change when we ask for advice, not money, especially on the kind of the early phases of doing a new project. Furthermore, something I'd add, you guys know this, but volume negates luck, right? So 10 to 15 people you've talked, have you guys tapped like your networks with the 10 to 15, or is this like just the test phase? Where are you at? Do you feel like, man, we are like back to the funnel? Where's my funnel here? Like we've tapped out like our rooms, so we've kind of texted and talked to everybody we know, or is this like no, we've done a little sample size and we want to do more? How do you guys feel about that?
I'd say this is, I don't know, maybe Brian has, this is Brian, my partner. I think this is probably the maxed out for high net worth individuals. You know, we kind of targeted them initially, thinking easier to bring in smaller group. You know, if we can get this done with 1 or 2 or 3 guys instead of 30.
Yeah.
Right. I don't think we haven't really pushed it yet with a 100K commitment minimum.
What's been your minimum you're pushing?
We haven't pushed a minimum. We just released a new pitch deck. Just created a new pitch deck with a 100K minimum, but we haven't really pushed it out yet.
Okay. But you've been trying to get a couple people, so you're looking for $1 million check.
Yeah.
Probably someone to help take this.
Well, one of the first people to talk to, you know, is, you know, probably worth 50 million somewhere in there and could do this project.
Yeah.
Just 3 million, you know.
Yeah. Now,
But those are the guys that have said it's actually not big enough. Like it's not really worth my time to go and do this.
Be this, yeah. What's been funny with us, we've seen this when we raise capital. People that can write those checks, they're still going to do a trial investment. You're new to them.
Mm-hmm.
And so even if they could write the check, they go, well, I'm going to give you my trial version of a check, whatever that is for them. And then if you do well, they will then double, triple, quadruple in the future. And so furthermore, my dad, we'll see if he comes here, but he mentioned an interesting story. So they raised, I'm going to use rough numbers. Let's call it $1 billion for a fund. Okay. It was right around there, which is a big fund. This is like their 10th fund. They've, you know, whatever. They've already have a track record. He said this was so interesting because they would love to have 7, 8 investors just take down the whole thing. And they had in the past had investors write $100 million checks, 150, like huge checks. I mean, those are big checks, right? He said what was so interesting was this. They launched this fundraise, and I'm using round numbers here, but let's call it a year. All the big dogs wouldn't invest because they want to take their time. They all want to be the last check in. No one wants to be the first person to put the check in. And so what they said was they said, we still have to do this. We go raise, like on a $1 billion fund, we'd go raise the first $95 million from high net worth individuals and small family offices at $1 million, $750, $2.5 million. To them, that's a small check.
Right.
And they'd get like, let's call it 80 to 90 investors. And because what happens is you talk to the big dog, like, well, we'll think about it, we'll come back. And if they call you in a month from now, how are you guys doing on the project? Well, we haven't raised $1. It's like, okay, these guys have no momentum. Versus if they call back and like, oh no, we've already got 1.75 million. We're looking to round out the final other. It's like, oh shoot. You know, these guys are serious. The train is leaving the station. There's momentum. And a lot of times they're waiting for that momentum. And so what my dad would tell you, if he was here, he'd probably say, we couldn't get the big dogs without the small people. Because the small people show momentum and their first check-in, it's like, hey, we've already raised about 100 million. This thing's going to be closed in 2 months. So you guys better get on the horse or get out of here. And they're like, oh, okay, yeah, you know what? We'll have a meeting on Monday. We'll get the docs going because everyone wants to be slow until they can't anymore. And so you want to show, and actually down here, this is what we call, not what we call, this is a known principle called the 7 principles of persuasion. You might have seen this before. These are from the book Influence. This is what we use to close on everything. This is not just funds. This is with anything. You see them up there. I usually have them pop up, but we're going fast. So authority on the topic. This is what things that will persuade someone to close on anything, okay? Do you show authority on the topic, yes or no? Do you have scarcity and urgency on your deal? That's what I was just talking about. So, hey, there's a deadline. Oh, and by the way, other people are coming in. So if you don't get it, that's fine. We're the pretty girl at the dance. Everyone wants to dance with us, so we got options. That's what you always want to have. Commitment. We're going to ask for commitments. We do that in funds a lot, right? If you're getting them to commit, people usually follow through with what they commit to do. Okay, we're getting commitment. Social proof. Who else is in this thing? Reciprocity. People generally, if I give you a gift, you'll give me a gift. So how do you do this in fundraising? Hey, I'm going to make an introduction for you. My partner, Dan Young, is so good at this. When we pitch a deal or a fund, we talk about crypto for 20 minutes. And at the end of the call, he's like, hey, you were telling me about your business. I was thinking about you. Do you guys need computers for your business? Because he sells computers. He's like, you know what we can do? I'll come by and help your IT guys, and we'll do a computer setup for y'all, and we'll get you guys going. He's like, oh, that would be so nice. And I'm like, hey, I have a podcast. You want to come on my show? All reciprocity. right? Giving in other ways. Can we give people gifts in other ways? That people generally give to people who give to them. Do I like this person? Is there a community around this? So now if you have 5 of these, that's fine. If you can do all 7, that's the best. Even if you have 1 or 2 of these, you can raise a lot of money and scale. But I would argue to have a lot. So back to you. It sounds like is there scarcity and urgency in your offer? Not a lot. Kind of shaking the head. So how do we build scarcity and urgency then? Maybe you get smaller checks to start building momentum. Secondly, deadlines, because it's a real estate project. Hey, we're going to lose the project on July 1st. And so we need X number of dollars by this date. And also it gives you guys urgency as well as a team, an internal team. Did Lincoln just walk in here? I saw him walk in. Maybe my partner, he just walked down and then I must have walked back up. Lincoln did a great job of this. You have to internally build urgency and scarcity, right? Even if it's not there, you have to say, well, we're having a deadline. The deadline is, ours was May 28th. You know, we're doing this. We just picked, to be frank, we just picked the day.
Right.
That is, we need the money in by that day. That's the final, so it
deadline.
just gives you deadlines.
Yep, creates that urgency, for sure. Yeah.
What's standing out to you? What do you want? Anything you want to double click on? What's been useful? What's not been useful?
No, I think it's been useful, just that process. You know, I think we do need to go back to them and because we haven't had firm commitments yet. We've had people say they're interested, but they haven't committed. So I am curious, what is the real reason you don't want to? What is the real reason you haven't committed, right? And I would love that information, whether it hurts or not. Like, I just love that information of why. So then I can fix it, right? Maybe it's something that's easy to fix. Like I said, we're pretty flexible. And we can kind of structure this around an investor that works for them. So it's like, we just want to get in the room and have a conversation with you. Let's just sit down and talk through it. What works for you? Let's make it work.
Yeah.
Let's make it happen.
That feedback loop, and you have to ask for it like 5 times. Is it the team? Is it, let's be real with us. We're actually trying to raise real dollars.
Yeah.
If we added a 3rd or 4th team member that's like got 50 years of experience and is crazy, like, would that help? What are the terms? Would you guys like a 10% pref?
Right.
Would you like a 90-10 split? Would that get you over the line?
Right.
And if you can get someone to and be vulnerable enough to be like, yeah, that's
Which is why I like the going for advice better. I think that was a good point, because then you're approaching it, you're entering it with, we just want your feedback. We're not even asking for your money.
No.
We just want feedback.
And they will give it. And usually it's pretty good. And it's what they exactly
and
want.
I think it makes it easier for them to give that feedback, because that's what you're there for. You're not asking for money.
Yeah. I love it.
Which you really are, but you're not.
But it's valuable.
Yeah.
Well done.
Okay.
Clap it up for chemistry, everybody. Well done. Well, I guess we'll just leave this up here. Good work, y'all. A little bit of capital raising there. I like it. Let's see how we're doing on time. Okay. Has this been useful? Somewhat useful? I've had fun. I've had fun doing this. Let's do one more. We hit 2 kind of on capital raising, so let's not do capital raising. Anybody else have a business or a fund or something they're working on? What's the biggest thing holding you back that we haven't discussed yet? I guess is the frame I'm going to put, because those were great discussions. Thank you guys for coming up here. Anybody else want to share? What's the number one thing holding you back in your business? Anybody? Well, you already went. We'll see if we can get some more. We'll come back to you if you want. Anybody? You want to go? You guys? Over here? Got a couple brave souls all of a sudden. Let's have you come up. Is that all right? Yeah. What's your name? Colby. Colby, that's right. Colby, clap it up for Colby, everybody. Colby, tell us what's going on.
All right, so I have a business, just launched it this last month, last year. So we have good testimonials. So my dad is a CPA. He owns a CPA firm. Okay. And so we did really well. We're a CPA advisor firm, so we do advanced tax level planning. We don't mess around with anything lower than 32% in the tax bracket, right?
Okay, so advanced tax planning. Yep.
Advanced tax planning. So he's scaling his CPA firm, and that's doing extremely well. This last year, we had 3 clients, and we kind of walked them through the short-term rental tax strategy, the short-term rental tax loophole. And a lot of them did, the 3 did extremely well. They wiped away their taxes. They got into real estate for free, basically, because they just used their tax money. So I built a model based off of that called, we're calling it STR Pathfinder. And it's just helping high-income individuals find short-term rentals to invest in. And I do all the math. I do all the underwriting, the whole process, everything. I already have 6 people ready to go. the problem is, so I mean, that's 30K for me, and then I'll probably net 18K off of that. I have to pay for cost segregation studies and all that, and then, so all in all, 18K. The problem is not enough time.
Sorry, someone pays you 18K.
Well, I get paid 5K per one. So, I mean, I get paid, so 5K per a client.
Okay, 5K
So
per
I have
client.
6 right now, and then, I mean, that's the problem with me
Gotcha.
right now is I'm maxed out in time.
I see.
Maxed out in time, and I don't have any, like, team or anything that I've hired yet because I don't have the solid process or SOP yet.
Gotcha. Okay, so team. So you've got a product that's launched.
Yep.
People are buying it, which is exciting. Congrats. That's pretty cool. That's the leap from 0 to 1 is massive. I don't want to understate that. Getting your first dollar in the door on a new thing is like the biggest hurdle ever. Anybody felt that before? It's like, wow, that's big. That's cool. So congrats. Colby. Well done. Well done. The next hurdle, that's a big hurdle, is hiring your first employee.
Yep.
It's a crazy day. You guys, anybody hired people before? Like a full-time employee, not contract, a full-time employee is like a crazy day. Because you're like, I'm going to split my income in half and give it half to this brand new person who I hope does a good job. And you're like, this is the dumbest thing I've ever done. But I know I need to hire somebody, but like, man, it's like you're cutting your paycheck in half to hire somebody. That's how it feels.
Yep.
Anyways, okay, so you're talking about scaling your time.
Yep.
That's the biggest constraint currently.
Yes.
You feel like lead generation's good though. You got people coming in. That's all good.
Yeah, absolutely. I mean, I partner up with my dad. He's a CPA. I have
Yep.
his entire client list. Every time he meets with a client, if they're interested in the short-term rental strategy, they go straight to me.
Yep.
So, I mean, I have more than enough clients is an issue.
Great. What? Double click on time for me. What about your time is being constrained?
The fact that I'm always going out talking to agents, finding deals. Like a lot of the time is just I spend my entire Saturday just going to open houses and underwriting properties and like honestly every single nuance of finding a real estate deal. I mean, I'm basically doing 6 deals at once right now.
I see.
And-
So someone's paying you like, Colby, I need you to go find me a deal, and then you do all the stuff and you bring them a deal for $5,000.
Yep.
And then they close on the deal. They do it all. Or
Yep.
You,
We walk them through that, and then I give them the
are you guys a
tracker.
real estate agent that helps? Like, do you guys get the fee for transacting this?
I'm working on my agent right now,
Agent
my
license, okay.
But it's, I mean, again, my time is constrained to the point where it's hard to do that right
Okay.
now. Yeah.
Is this your full-time gig? What else are you doing with your time?
Yeah, this is my full time.
This is full-time.
I'm also the head of marketing and sales for my dad's CPA firm, but I mean that's taken a backdoor seat. Like I don't really do much of that anymore. I pretty much just talk to
doing this.
people on the phone and I just do this. Yeah.
Cool. So, and a lot of it seems manual.
Lots
It
of
is
manual.
very much you. You're
Yep.
the guy. So when you look at these, I wrote out a few things here. Is this a good
Yeah.
of what you do every day? License. You're working on your license. You're working with agents, so you're finding deals. You're underwriting those deals. Correct?
Correct.
Of those, which one is the least technical of those? Meaning least you could train someone else to do it. Of those current tasks that you have,
Probably the finding of deals.
finding deals. So let's double click on that for a sec. What would it take for for you to hire someone to go find deals for you all day? Here's a different question. How long would it take you to train someone to find deals all day?
Probably like, if I was spending all my time doing that with them, probably like a week or 2.
Okay. 1 to 2 weeks. How much time would that person, if you had a full person trained right now finding deals for you, how much time would that save you every week?
Significant amount, probably.
Give me a number.
At least like 40, maybe like 20 to 40 hours, depending on the workload that week. I would probably say more close to like the 30 range, yeah.
There's a concept I love called management debt. You heard of this concept? Management debt is the idea you spend or pay 1 to 2 weeks of your time to buy back 20 to 40 hours of your week in the future. You go into management debt to train this new person 1 to 2 weeks. That will save you 20 to 40. If it's 40 hours a week, that's 2,000 working hours next year. Worth the trade-off.
Absolutely.
Spending, let's call it 60 hours of your time to buy back $2,000 of someone else's time. Well, worth it.
Yeah.
And when you put it that way, furthermore, The debt you are in right now, because you haven't done this, means you are wasting 2,000 hours a year because you haven't spent the 60 hours to train that person.
Right.
It's another way to quantify it.
That is.
Another way to quantify it, if you had an extra 40 hours a week, how much more money would you make? A lot. So all of a sudden, I mean, this is probably the most important thing in your business you should do right now.
Yeah, absolutely.
When you look at it this way, you're like, oh, frick, I am losing out on hundreds of thousands of dollars
Yeah.
because I'm in management debt and I need to pay the debts. The debt is due. I need to go and spend 1 to 2 weeks hiring this person. I know it'll slow me down in the short term, but it's going to unlock an extra 2,000 hours per year for me to work with.
Absolutely.
Kind of cool.
Absolutely.
So now this is scary though. It is scary to hire your first person.
Yep.
And find the right person and do stuff. What I'll tell you is this, from just my own experience. You're never going to do it perfectly. Do your best though. And understand that every business owner that scales has to hire people and train people. They have to get good at this skill. It is a skill of business.
Yeah.
I would go on, I started watching videos on YouTube. I'd watch, how does Elon Musk hire people? How does Jeff Bezos hire people? How does Bill Gates hire people? All these billionaires, like how do they hire people? What are the questions they ask? And then I would just go, I mean, to be frank, I started posting on social media, Instagram, LinkedIn. Hey, I'm looking for somebody to help me. You'd be surprised how many people would come and check you out. Put a comp package together, walk through comp packages. It's going to take you a week or two to do this,
Yeah.
right? But it's going to save you that much time.
Ton of time.
Is that helpful?
Absolutely. Huge. Thank you.
Yeah. Clap it for Colby, everybody. Well done, Colby. Actually, I want to share one more thing on this for the group. Do you guys know how much money you made last year? We'll do a quick, put it in your head. How much money did you make last year? Like literally, on your, not how much you think you made, how much did you actually make? Okay. How much did you make last year? Dan Martell does this in the book. I'm going to give him credit. Take that number, pull out your phone, and divide it by 2,000. How much money did you make last year? Divide it by 2,000. I'll do a live example here. So if you made $250,000 last year, okay, and you divide by 2,000, there are roughly 2,000 working hours in a year. So if you work 40 hours a week for 50 weeks, that's 2,000 hours. This is your hourly rate. Because some people, you charge a high hourly rate, but when you average it, this is your average. So this would be, you're making $125 per hour on average. Is this making sense? I had a guy that came to me, he's like, Bridger, you got to pay me, he's like, you got to pay me like $400 an hour to work for you. I'm like, okay. I will happily pay you $400 an hour if that is what you're worth to the market. I wanted to pay him like $100 an hour, $80 an hour. He's like, no, I'm worth $400 an hour. I'm like, cool. Well, can you send me your tax return of last year? We're going to divide it by 2,000, and I'm going to see if you're actually worth $400 or $500 an hour. If you are, I will happily pay that for you. Is that making sense? And he's like, well, that doesn't, no. But I'm like, well, you got to average it out. I know you make $500 an hour for the 2 hours you work here, but what about the other hours you had to prepare for that call and not do that call? Give me your average. Is this making sense? I love this. This is from Dan Martell. He wrote a book called Buy Back Your Time. I think about this all the time. So let's take this example, $125 an hour. What he argues in the book, if you can hire someone for $80 an hour, or another way to look at that would be 80 times 2,000, $160,000 a year. He argues you should do it. Now I'm talking 250 take home, but you're like, man, I would never pay someone 160. Well, if they can buy back 2,000 hours from you next year, what could you do with an additional, the delta that you have of those two numbers, which was $90,000, plus an extra 2,000 hours? He goes, any job that you can pay below your hourly wage, you should pay for. Any task that you do that's below your hourly wage, you should do it. Meaning, cutting your lawn, dishes, like the food, DoorDash. My office made fun of me forever because I refuse to go to lunch. I don't take lunch meetings with people. Some of you have DM'd me, Bridger, can we go to lunch? I'm like, no. I do not go to lunch. Lunch is such a waste of time. Unless you're like someone like a billionaire or something, I go to lunches rarely. Why? Because it's going to take, I got to drive there, I got to meet, I got to get we got to get in, we're going to be delayed. It's going to take an hour and a half total of my time. I know what my time is worth. I am not going to spend, unless I'm going to make an excess of about $1,000 an hour, maybe $1,500 per hour, I am not going to that meeting. That's how I think about it. My office like, man, I DoorDash food every day to my office, every single day. Because it costs about $30. I know it's egregious, but I'm like, I spend $30 to save 45 to 50 minutes of prime working hours. Now, I don't believe in like perfect optimization because you can't be. But when I'm in a prime working, what I believe when my mind's at peak mental state, when I'm prime working hours and I like am going on stuff, man, do not interrupt my flow. Like I am in the game. My office knows if I have my headphones on and I'm working on stuff, do not interrupt me. I'm in prime working hour flow like that. That is expensive time. And so if I'm going to take a meeting, I put it through the frame of this meeting is about $1,000 I'm spending, maybe $1,200 I'm going to spend on this meeting. So is it worth that? Furthermore, if I'm going to get taken out of my workday to go and do some other thing, is it worth that hour? Is that making sense? Very useful thing. Dan Martell, huge shout out to him. And I'm always thinking like, man, can I put that, take that hourly up? Furthermore, another way to, anyways, I go on. I'll stop. I love this concept. I think about this all the time. You can go a little bit crazy thinking about it too, but it's very interesting. What is your hourly rate, and how do you optimize for that? That's how the big people scale. That's how they do it. All right. Has today been useful? Somewhat helpful? Hit a few items. Thank you all for coming out today. I'm going to share one last story and then we'll wrap up and we can just hang out. Does that sound good? So I want to just share a brief story about, we're talking on here all about teams and partnerships and funds and making money and crushing it and doing big things. I think it's ever crucial to, I'll frame it like this. I had someone recently ask me, like, what do you define success as? You ever thought about that question? Like I was on a podcast show and they were like, what's success? And I thought about that for a long time. I was like, what would my definition of success be? What does true success look like? And I believe the greatest success that someone has that can build in this, like the biggest flex, because like, is it cars? Is it having a bunch of money? Is it kids? Is it spiritual? Like, what is it? Can I define it? Can I find someone who has it, right? And I found about two people that have what I deem as like the best success on earth. If you can build something of extreme value, right, that benefits a lot of people, obviously, and helps them, success. Furthermore, if you can compound that through a family and or multi-generational family, I think that's the biggest flex success on earth. And I'll give you a definition. My wife's family, her grandpa, they have lived this. He's 70-something years old, very in shape, done a lot of great things in his life. They have some money, whatever, but their kids, it's a reflection of in their kids. They've been married for 50 plus years. They've got amazing kids. Their kids are phenomenal. Their grandkids, which is my daughter, phenomenal people. Not my daughter, my wife is one of his grandkids. Phenomenal humans. And then they now have great grandkids. If I brought you to this family meeting, they get together every Sunday for Sunday dinner. I mean, it's pretty darn cool. We go to a vacation together. Like, of the 60 or 70 people in that family tree, I think 2 have been divorced. All of these people are doing cool. I mean, they're married. They're doing great things. They're raising great kids. You go to the event, like, every dude has a 6-pack there. Like, I have to, like, work out before I go to make sure, like, everyone's in shape. Everyone's doing cool things. They're benefiting the society. They're running cool businesses. They're doing amazing things. And I'm like, wow, that's pretty phenomenal. Like, how did they do that? And they're all spiritual. They're all served, church in their church. They served in college. They served all these cool things. They benefit their community. They give money to charity. They have cool bits. Like, they're just incredible humans. And I'm like, how did they do that all in one family tree? And it starts from the top. And I think it's the biggest flex in life because you can't buy it. You can't even build it in like a year or 2 or 5 years or 10 years or 20 years. It takes like 30 or 40 years to build that. And you can't even build it alone. You have to do it with somebody else, with a spouse. I've thought about that a lot. And I'm like, man, I think that is true success. If you can compound good things into your kids, your grandkids, your great-grandkids, how cool is that? I mean, that is generational success. Now, I know every family's different. People go through situations sometimes, and sometimes you can't control it because of partners, things happen. But if you can strive for the ideal, I think that's worth striving for, or even have a piece of the ideal. And so today, you know, there's a lot of, you know, we're in the Utah scene. You know, there's a lot of, I love Utah. You mentioned how much you love Utah. There's been a few scammers in the Utah scene as of recent. Do good things. Help people out. Do what you say you're going to do. Follow through. Furthermore, have audits on your businesses. All of those scammers that have come out in Utah and around the country right now, the tide has kind of gone out, so we see who the scammers are. It's kind of how it works. None of them do annual audits. We didn't talk about that today, but do annual audits on your businesses and funds. Have third-party admins check. Like, make sure things are done that are buttoned up. Every fund that we have, all it does an annual audit every single year, which is pretty darn cool. The last thing I'll share, I keep saying the last thing. I'll share a quick story about on that topic. This is when I was 24 years old. I got invited to a meeting just over here in Lehigh, just down the road. This guy's big office. I go drive up. I meet with him. I'm 24. He's like, I don't know, twice my age, probably around 40, 45 years old. Very successful individual. Supercars. He's got a private jet. I mean, awesome. He sits me down. He goes, Bridger, I've seen what you've done. You've done some cool stuff with Fund Launch and whatever. I would love for you to partner with me in my business. We're running this. We want to convert our business to a full-out fund. We got about $100 million of assets. I want you to be like a 25 to 30% owner in this business. And I'm like, dang, like dream come true. Like, I'm like, holy crap. Like, you work your whole life for like that opportunity. He's like, dude, I'm giving you like an amazing chance here. Come be a partner with me. We're going to run this huge empire. We're going to take it to $1 billion plus. And we got all the resources to do it. And I'm like, dang. I go home. I tell my wife, we're somewhat newly married. I'm like, honey, this is it. Like, we've been working so hard for this. This is our moment. You guys, any of you have a moment like that? But I'm like, honey, this is the one. And like all things, I'm a decently, faith-based person. I'm like, I'm going to pray about it. And we're going to pray about it together. We kneel down, we pray about if we should do this thing or not. And the answer is a no, blatant no. Do not do this deal. And I'm like, God doesn't always speak to me, but when he does, like, I'm going to listen, It's like, if I ever feel like I got an answer, like, I pray a lot, I don't get answers very often. But like, when I do get an answer, like, I'm going to listen to the answer. You know what I'm saying? And it was very clear, like, do not do this. And so the next day, I'm like, and my wife felt the exact same thing. She's like, we should not do this. I'm like, okay, let's not do it. So we went, I told the guy, I was like, hey, I don't feel right about it. We're going to pass. And he's kind of like, yeah, no worries. You're dead to me. Like, see you later. Like, you're missing out. Like, bye. Click. I was like, dang. I'm like, all right. So I leave. 3 weeks later, I get another call from a different guy. Almost the exact same story. I drive to his office. This guy drives a supercar, like, very successful individual. He's like, Bridger, I want you to partner with me. We're doing a $100 million fund. We have, and I was like, dang. This is awesome. I mean, that's why we said no to the first one, is for this second one, right? I was like, oh, I'm so excited. I come home. I'm like, honey, we got this great deal. This guy wants to partner with us. We're going to crush it. I'm 24 years old, or I think it's 24, 25 years old. Like, this is going to be amazing. Same exact scenario. We pray about it, and guess what the answer is again? No. Do not do this. And at that time, I was like, is this me? Or is this God? You know what I mean? I'm like, now we're passing on 2 amazing deals that I should do. Like, you know what I mean? Have you ever felt that before? Like, is this me? Is this God? Is this intervention? Is this not? Am I just an idiot? But I was like, no, I felt like that was for real. So I called the guy up. I said, hey, I'm going to pass. Nothing happens. I just go live my life. Those 2 guys go run their businesses. They're very successful. I followed them. Like, man, they're crushing it. Like, they're killing it. I run my business. A year goes by, 2 years go by, 3 years, and now I run my funds. I'm running Fund Launch. We're just growing, and we're doing fine. Nothing wrong. I'm doing great. But I'm like, I always thought about that. Like, man, why did I say no to those? Last year, the first guy, FBI raided his office, total big like fraudulent scheme. We'll see, they're in court right now. We'll see what happens. Huge thing blew up, like $15 million Ponzi scheme. Crazy. I was like, wow, holy crap, like what a blessing. Second guy, like 6 months later, blows up online, huge, I don't want to call it, they're still in trial right now, but call it a Ponzi scheme. Allegedly $500 million stolen, gone. If I was involved with either one of those two, I mean, that's career ending for someone in my space, right? You're tainted forever. And that night, me and my wife went home, and I said the deepest prayer of gratitude I think I've ever said. It's like, Heavenly Father, thank you so much for steering me a little bit this way. And I didn't know, it took me 4 years to figure out what was going on. Like, thank you. And so what I invite you all today, be in touch with God, whatever that means to you. Be prayerful. And I believe God cares deeply about our businesses. He cares what we do. The ripple effects of what we do matters, especially when you manage money. I mean, the ripple effects are huge. You're building how many units again? 55 units. The ripple effects of that are massive in that community and the people that are going to live there, the partners. I mean, what we do matters. It matters, especially when you have a fund. But even if you don't have a fund, it matters what you do and the choices you make and where you move, who you partner with, who your neighbors are. I mean, there are so many ripple effects. Do not underestimate those. And furthermore, I believe God cares deeply about us, all of us. And I'm just little old Bridger. I'm nothing special. And God in his infinite wisdom allowed me to sidestep 2 pretty bad deals that I said no to, which I was so grateful to now. At the time, I had no clue why. So listen to that intuition. Think through the ripple effects. Welcome to, you guys are amazing to come out today. If you can, tell people about, we might do one of these in the future. We might not. I don't know. We'll see how we do. You can be on our email list or follow me on social media. You can tag the event or tag me. Come grab a picture with me if you want. I got to run to a meeting here in just a few minutes. But great having y'all out here today. My team is here too. You can talk to them. We help people launch funds. So if you want to launch a fund, come talk to Bree in the back there. Wave Bree for us. We help people launch funds all the time. So that's what we do. Today we just wanted to teach more stuff and help more people out. Sound good? Y'all are amazing. Thank you all so much. And we'll see y'all next time. Grab a t-shirt or a bag on the way out, and we'll go from there. Thank you all. Good to have you here. What's your name? Grant. Good to have you here, Grant.
I met you at a dance.
Yes, I still have this.
You still have
Yes,
that?
yes.
Well, this is the new Florida edition.
This looks beautiful.
And Goldback headquarters is right here in Lincoln.
Yeah, yep,
And Alpine Gold Exchange, where I've worked as an employee the last 2 years,
yep,
is in Alpine.
yep.